I'll just run it for a while till the chairman gets here. And Mr. Anderson, we have one more bill under local revenue options. And I'm sorry, I may have misspoke for you people on the line. I know I misspoke. I was able to correct myself. We still have this one to do. So welcome back. Mr. Chairman, it's all yours. This is a gavel. Go for it. Be hard on it.
Okay. Thank you, Mr. Chairman. Mr. Anderson, you ready?
Sure thing, Mr. Chairman. This is 22 LSO 221, working draft 0.4, special taxation district optional tax. And Mr. Chairman, what this does, this, if you remember from the September meeting, was brought by Representative Heiner and some other people that he was with on the idea of essentially expanding the optional municipal tax that we put in a few years ago, or maybe just 1 year ago. I can't remember exactly when that went in. To include the ability to form a special taxation district of something that would extend outside of just a municipality. So getting into the bill, Mr. Chairman, on page 2, you can see a lot of the bill is just, kind of inserting or special taxation district to allow for this tax to be imposed either there or in a municipality. You'll see at the bottom of page 2, we added some language to just make sure that none of these areas could impose a tax twice by having one municipal tax and then also a special taxation district. So all that language there at the bottom of page 2 and over to page 3 is to just clarify that this tax can only be imposed one time at any area within the county. Mr. Chairman, down to page 3, again, this goes into the municipal optional tax and just clarifies who can propose the tax. And it could be either the city or town, or the city, town, or and county comprising the special taxation district. At the bottom of page 3 there, this was a concern that came up. Currently, the tax cannot exceed the amount of the tax proposed or the amount of the specific purpose tax. We didn't see a good way to figure out what the amount of that tax would be within one of these special taxation districts, because it could be a city in any portion of the county. So we changed that there to just say the rate of the tax under the specific purpose tax. I believe there'll be an amendment coming later to further address that issue. Again, there on page 4, just adding the reference to the special taxation district. Same on page 5, bottom of page 5. Just clarifying that the county would also need to adopt the ordinance imposing the tax if it's also extends into the county through one of these special taxation districts. Over to page 6 again, just making conforming changes to add special taxation district. Same on page 7. Over to page 8, Mr. Chairman, this is where the special taxation district would be formed. Just copied much of this language from just existing provisions related to the formation of special districts. So it requires this, or allows the city or town to request the Board of County Commissioners to form a special taxation district comprising one or more cities or towns and areas in the county that are outside of the boundaries of the city or town. Requires that to be filed with county commissioners and provided to the county assessor and the department to review prior to submission. Requires the governing body of each city or town included in the taxation district to approve that prior to submission to the county commissioners. It then allows the county commissioners to hold a hearing on that. And again, those hearing procedures are essentially copied from the special district formation hearing. That continues on to page 10 and 11. And just if the formation is approved, and then the county commissioners would enter an order declaring formation of the special taxation district and set forth the boundaries. Subsection or subparagraph M require the county and the city to form a joint powers board for purposes of the special taxation district and the administration of the tax. Mr. Chairman, over to page 12. That's just conforming language again to clarify what taxes can be imposed by which entities. And another conforming change to add a reference to special taxation district in the rate section. On to page 13, Mr. Chairman, the distribution of the tax. This just says, clarifies that the existing language applied to a municipal tax creates a new distribution for a special taxation district that would be based on population, similar to the sales tax distribution within each county. And then the remainder of, most of the remainder of the bill, Mr. Chairman, is the same changes, but made to the use tax provisions. So the rest of the bill, I believe, is pretty much identical, and it becomes effective July 1 of 2022. That I take any questions, Mr. Chairman.
Any questions? Okay. Okay, Senator Schuler.
Thank you, Mr. Chairman. I'm trying to remember when Representative Heiner first brought this idea up. I'm trying to think in my mind of different projects that this might work for. And was there something in particular that maybe they couldn't get with a municipal tax or with a penny tax or something like that? So could you maybe refresh my memory on that?
Mr.
Go
Chairman,
ahead. I think Senator Baldwin wants to tag team on that.
I would love to. Thank you, Mr. Chairman. This was brought as a need, and I'll just tell you about our county. I think we talked about in the meeting, it wouldn't just apply to our county or one of my counties. And that a countywide tax issue was raised, trying to get some particular projects done in southern Lincoln County. Most of the population in Lincoln County is in North Lincoln County, and that's where our population growth has been. Consequently, when the issue came up to address some of those issues that needed done in Kemmer and Diamondville, Labarge, some of the southern communities, it failed because of the vote by the population center. This bill is a means or attempt to get these issues to come up where they can control their own destiny. Where a community like Kemmer or Diamondville, when they have special projects, and they have a lot of infrastructure needs at the moment, that they can bring that up with their special tax district, and then they can get those accomplished without those means being defeated by a larger population base in a different part of the county. And that's where this originated from. I know we talked about it in the meeting last time when Representative Heiner, and I believe the city manager from Kemmer was there as well, as though we're not alone in the state. There's several counties in the state and communities in the state in the same position. That was the justification for this and the request.
Right. And Josh, this can be either this one penny could be either general purpose or specific project. But it's 1% is the statutory limit.
That's correct, Mr. Chairman.
Right. Doesn't change any of that. Okay. I think Representative Heiner was going to try to join us online, or somebody from Kemmer. Is there anybody out there that?
Yes,
I think
Mr.
we're-
Chairman, I'm letting Representative Heiner in right now.
That would be great. And then after Representative Heiner, we'll start moving to public comment. There he is. I can see him.
Thank you, Mr. Chairman.
We can hear you. Welcome.
Good. Scott Heiner, Representative Scott Heiner from House District 18. Mr. Chairman, Mr. Co-Chair, and committee members, thank you for the opportunity to voice my support for this bill, Bill 221. As Mr. Anderson mentioned earlier, the municipal sales tax went on into effect in January of this year. So it's a relatively new tax that is active right now. But the problem it being for these small communities, it's limited to the city limits of the community. And many of these smaller communities do not have the tax base within their city limits to be able to generate any viable source of income from an optional sales tax. This optional municipality tax provides, as mentioned by the good chairman, up to 1% in 0.25% increments. And it's only for 2 years. So it's a temporary tax, and it can be specific for infrastructure such as Cameron needs help with their streets. That's what they are targeting, or it can be for general use, but it's ultimately left up to the voters to decide whether they will, the voters that are affected, whether they will approve or not approve it. So with this bill, as mentioned by Mr. Anderson, it doesn't change this existing law. It's not a new tax. It just expands on this tax that went on the books recently to allow the municipality to expand beyond their city limit and utilizing precinct boundaries, be able to encompass some of the big tax basis that surrounds communities. Some of these smaller communities are in existence because of infrastructure or industry that's located in their vicinity, but not within the city limits. So what this bill would do is allow the boundary of the special use tax to be a little bit beyond the city limits, possibly following precinct boundaries. It still keeps the county commissioners involved. So they must ultimately approve this special taxation district. They'll be very integral in setting the boundaries. They'll be in concert with the governing body of the municipality or the city, and they will have to approve it. So the county commissioners will have to approve this special taxation district, and it's still going to be temporary in nature. And it still will be ultimately decided by those affected via a ballot initiative. So nothing's changed there. The only real emphasis is that we're changing the boundaries from a city limit to expand a little bit more so we can encompass some sales taxation from some of the industry that surrounds these small communities. So with that, I will sit for any questions that the committee may have about this bill.
Okay, members, any questions for Representative Heiner? Okay, seeing none, are there folks here that would like to speak on this bill? And are there other folks online?
No, Mr. Chairman.
Okay, so Representative Heiner, stay close and we'll go through public testimony now. Welcome.
Good afternoon, Mr. Chairman, members of the committee. My name is Jeremiah Riemann here on behalf of Wyoming County Commissioners. I'm not coming to you with on this bill with a position quite yet. There are some things that we are requesting that you change in order to address some concerns that we have. And if this moves through, we'll get you a position as quickly as possible. Mr. Chairman, I did pass out a handout, given that to LSO staff. They do have electronic copies, so I hope everybody has that. I have reviewed these issues with Representative Heiner, so nothing that I'm going to say is going to be new to him. There really are 6 issues that I'll address through this proposed amendment. Mr. Chairman, the first one starts on page 3 and goes through to page 4. It's the first 3 pieces of the proposed amendment. And Mr. Chairman, your staff have tried to correct a small issue in terms of the reading of the language, but unfortunately, I think without an amendment, it upsets the delicate balance that we struck a couple of years ago relative to the optional municipal tax. And it really deals with that rate and amount issue. You'll see in the first instance, I've left the deletion of amount in and allow for the rate to come in there. But later, I suggest that we put in on line 23 after exceed a rate equivalent to, and then keep the deleted language. So it would read an amount equivalent or rate equivalent to the amount of the tax and so on. The reason this is important is, in particular, if you think about the specific purpose tax, yes, you're delineating a rate that's going to be charged, but you're also suggesting an amount that is going to be collected. And what we couldn't have in the optional municipal tax is, say, the city of Cheyenne propose a tax that was going to be 10 years long and disrupt the other sales and use tax system that we have in place. So we had to have a constraint there. That's why we put this amount in there, that had to be within some parameters. And the other one was that we wanted to ensure that other municipalities also had space within the tax rates that are allowed under our current statute. So this is an important provision, perhaps the most important provision to my members to make sure we get right. And so I would propose that change. Again, the first three provisions that are on the proposed amendment that I've handed out. Mr. Chairman, going to the second one, that is on page 8, line 21. And in this area of the proposed draft, it suggests that if we're going to look at forming this special taxation district, that we would move out proposed boundaries to the county assessor and the Department of Revenue. I think that's good. I'm suggesting perhaps we include the county clerk, because ultimately they're going to be responsible for the election and they might have something to say about the boundaries. It's just an opportunity for them to opine on that, not a requirement that they do so. So I suggest after county assessor, we put in county clerk. Mr. Chairman, the next one here is on page 9, line 16. And this particular provision, it indicates that we would post notice of this public hearing in 3 public places. The question that I had as I reviewed this, as I might in a lot of these, is does online count? Certainly understand posting it in the courthouse or posting it in the library. But if the municipality and the county are posting it online, does that count as one of the 3? And so you'll see I've proposed that we just define that that is a possibility. Mr. Chairman, the fourth issue is on page 9, line 18. And in that particular area, or counties comes up. It's the only point in this entire bill where it's contemplated that maybe a special taxation district might be more than one county. I don't know that we want to quite get there with this particular bill. So I'm just suggesting we delete those 2 words, or counties. Mr. Chairman, the next one is on page 11. Lines 13 through 18. This is a provision that after you've defined these boundaries, you've decided that you're going to have a special taxation district. This suggests that you will now be required to form a joint powers board. I don't think that's necessary under this particular bill. If it's general purpose, the money is going to be going into the general fund and you're going to do good things. If it's specific purpose, you've already defined what that's going to be. It doesn't necessarily mean that the county is even involved. So why do we need this board? So I'm suggesting we delete that. Mr. Chairman, the last issue deals with page 13. And it's the last 4 pieces above the delineating line on my amendment. And what I actually think if you keep this language the way that it's proposed in the bill, it defeats the purpose because it suggests that the tax is going to be distributed on population. And what you've heard from the proponents is that they're trying to capture population that's beyond the city limit boundaries. So I don't think you want to go in this particular direction in terms of distribution. So what I've proposed is you just take out all of the inserted language, keep the original language, but on the lines where it says, so on, for example, on line 3, it says what it goes 2 to 3, but it says to the city or town. You can put in there or special taxation district. And then in the next instance where it has city or town on line 4, you do the same. So the notion being that it's distributed in the manner that you decided already when you proposed it to the voters, whether that was general purpose or specific purpose. It doesn't need to be further delineated by the legislature. Mr. Chairman, those are the 6 issues. The delineating line is just, again, what Mr. Anderson pointed out. Everything duplicates in the use statute. So everything else in this proposal is the exact same. With that, Mr. Chairman, I would be happy to stand for any questions that there may be.
Okay, thank you. Appreciate it. Any questions, Mr. Raymond? Okay, Mr. Heiner, any follow-up on that? I think you two are kind of working together on this a little bit. So any other
Yes.
comments?
Thank you, Mr. Chairman. The proposed amendments that Mr. Raymond has proposed are friendly amendments in my opinion, and I support them.
Okay, very good. Thank you. Any other public comment on this bill? Good afternoon.
Mr. Chairman, Bob McLaurin with Wyoming Association of Municipalities. We like the bill. We like the amendments proposed by the County Commissioners Association. Ask for your support.
Okay, thank you. Any questions, Mr. McLaren? Okay, thank you. Any others? Director?
Mr. Chairman, members of the committee, Brenda Henson, Director of Revenue. The first thing that I wanted to address, when you look at this legislation and it states special taxation district option, optional tax. Quite honestly, I've received phone calls and even my staff are real concerned because they look at that special taxation district and they automatically think of Title 22, Chapter 29, special districts. And there is an entire act that talks about specific things that have to be done with those special districts. So I would ask that the committee consider perhaps changing the word district to zone so that it's very specific. This is the only legislation or the only statute that would be specific to excise taxation. And other than that, we don't have special districts with excise tax. That language is all pertinent to property taxation. So that is one thing that I would like the committee to consider. The other item on page 8, that's the requirement that was specifically noted previously that talks about providing the information to county assessors, to the Department of Revenue. Again, that's all language that comes from property taxation. And so while the employees that we have that do the mapping, they're certainly capable and can go ahead and map these districts once it's provided. But we just want to make sure that the same requirements that hold true for all other special districts aren't applicable, that simply all the Department of Revenue staff would be required to do is map those boundaries and make sure they don't overlap with any other entity that is exercising the option to implement this excise tax. And just for information purposes, we are currently reaching out to streamline sales tax and then also getting an idea of what programming would be within our excise tax division maintenance system, but I don't have that information today. And the only other, I think, heavy lift for the department is educating our vendors. When you create a new district like this, making sure the vendors understand if they're within the boundaries or not, and if they should be collecting it or not. And with that, Mr. Chairman, I stand for any questions.
Questions? Representative Gray.
Thank you, Mr. Chairman. So I had a conversation with someone from Laramie County that, and I think actually they had talked with you, that there were major vendors in Laramie County collecting a 6% after the expiration of a 6%, major vendors that you would think would know. And so if they're not getting it right, I mean, this thing is so confusing as to what the boundaries are. I mean, I guess my question is, I think this is becoming so complex as to be almost unintelligible for a vendor. I mean, do you agree? I know, do you agree?
Hey, Director.
Mr. Chairman, Representative Gray, it is true in Laramie County, when that tax optional went away, we did have some vendors that were still collecting it. Although we had sent a letter to each one of the vendors within the Laramie County. In addition, there was a press release. We had it posted, but you're right. I think getting that information is sometimes challenging. We've since put a new, I guess it's when you go to our YF system, where the vendors actually report their sales and use tax collections, we've put a announcement out there that they have to read in order to proceed further. That gives them an update on any boundary, well, not boundary because we don't have any now, but any rate changes statewide that they may need to be aware of. So we're hoping we address some of that, but specific to the vendors, I think, moving to the optional municipal tax was a first step in Wyoming to changing where we have just county boundaries, 23 boundaries that vendors had to keep track of. So it's going to be a learning process. I agree. But certainly the Department of Revenue will do everything we can to try and make sure that that transition is as easily understood as possible.
Okay, follow up.
Thank you, Mr. Chairman. When a vendor collects something incorrectly, I suppose they're remitting it to you. Are you sending it back and then they're keeping it? I mean, what happens? I know there's no penalty there. I did hear that from the person that had seen this, but are they remitting this extra amount to you? Are you catching that and then sending it, or do you just keep it?
Go ahead, Director.
Mr. Chairman, Representative Gray, they are required by statute to remit that to the Department of Revenue, and we distribute it just as we do all other. Now, if a customer goes to that vendor, they can ask the vendor for a refund if they have paid too much in sales tax, but the customer can not come directly to the Department of Revenue and request a refund of that tax that was collected. We don't have that detailed information to indicate that they paid it. So it has to go through the vendor.
Okay, any other questions? Senator Schuler.
Thank you, Mr. Chairman. Just a question. I think the idea of maybe renaming this special taxation zone might be a good catch in a way, because it appeared to me early on when I came into legislation that you talk about special districts and some people will just vote against them just because, where I think this has some merit. I guess my question would be then if in fact, and I don't know if Representative Heiner, if that would be a friendly change, but we have special taxation districts throughout the bill. So would that be okay to change that to zone if in fact he approves of that?
Mr. Chairman, Senator Schuler, I would hope that that would be the case, that everywhere that is noted as district would then become zone.
Okay, I'm looking at Josh Josh, you want to comment on that? I mean, it's throughout the bill.
Yeah, no, totally fine with me, Mr.
Yeah,
Chairman, if that's
easy
the
change.
direction of the committee.
Okay, very good. Thank you. Any other questions, Director? Okay, thank you, Mr. Director. Any other public comment? Okay, seeing none, no one online. Okay, Representative Gray. Yeah, oh, absolutely.
Thank you.
Yeah.
Thank you, Mr. Chairman. Mr. Anderson, when I went through this, I think I found it somewhere, but I'm not finding it now. How often can these be done? Because there's so many things, moving parts. I want to understand, how often can they do this if it fails?
Go ahead, Mr. Anderson.
And where is that in the statute? Thank you.
Mr. Chairman, I'd have to look and find the citation here. I believe how this tax works, Mr. Chairman, Representative Gray, is that it can go on a certain amount of time after the county approves a special or a specific purpose tax. And then it ends a specific amount of time following the end of that specific purpose tax. Or the county can vote to authorize it if the specific purpose tax fails, in which case it can go on for, I believe, for 2 years. I'll have to find you the citations there, but I'm fairly sure that's how it works, Mr. Chairman.
Okay, so really the same as existing. Similar. Okay. Any other questions? Any other? Okay, seeing no public comment. Members? Any, what's your pleasure on this bill? Been moved by Representative Sweeney. Seconded by Senator Baldwin. Okay, members. We'll start working from the beginning here. We'll just, I'll just say any amendments here, or would someone like to move this large amendment, which encompasses several pages?
I would move that amendment.
Okay, so Senator Baldwin moves, this is, we'll call this the County Commissioner Association Amendment. Is there a second? Seconded by Representative Roscoe. Okay, our members, are there any questions on this amendment? Presented pretty well. Representative Sweeney.
Mr. Chairman, thank you. So are we doing all of that? I didn't understand the delineation line comment.
And Mr. Co-Chair, why don't you clear that up? You want, or that delineation really is,
That's just about the sales tax is going to be identical for the use tax. So first part, then there'll be identical changes for the use tax.
Thank you.
okay. Any other questions? Okay, all those in favor of the amendment, please raise your hand. 5, 6, 7, 8. All those opposed? 1, 2, 3, 4. Okay, that motion is passed. That amendment has been adopted. There are other amendments. Senator Baldwin.
Thank you, Mr. Chairman. I would propose the amendment to change the name throughout the bill instead of district to zone. Make that throughout the bill.
Okay, it's motion seconded by Senator Schuler. Any discussion? All those in favor, raise your hand. 6, 10, 11 opposed. Okay. Okay, 11 to 1. I believe that is passed. Any other motion, any other amendments? Question. Okay, you have a Representative Sweeney.
So I would really like to thank Representative Heiner for his work on this and bringing forth what I think we should be doing as legislators, trying to represent your constituents when you've got a problem, and the same for Senator Baldwin and Senator Schuler, trying to find solutions for not just your area in your district, but statewide. I believe I remember being on revenue when we worked with this compromise between the cities and the counties on a special vote and municipalities having more options. That bill is so clunky. And I said that at the time, and very difficult to work with. And I think this is a great solution. And I just appreciate Representative Heiner's work on this. And I can't stress enough that after making these modifications asked by the County Commissioners Association, I would surely hope that they would support this at their next meeting. and have their full support. So thank you, Mr. Chairman.
Okay, thank you, Representative Sweeney. Anyone else? Okay, since you're ready to vote, okay, can we please call the roll on 22 LSO 0221, special taxation zones, optional tax.
Senator Baldwin,
Aye.
Senator James, Senator Pappas,
Excused?
Senator Schuler, Representative Baker, Representative Gray, Representative Hallinan,
Aye.
Representative Henderson, Representative Jennings, Representative Roscoe,
Aye.
Representative Sweeney, Representative Yin,
Aye.
Co-Chairman Case, Chairman Harshman.
That bill is passed, and next on our agenda is it's 10:40 a.m.
Mr. Chairman, do we need to announce the vote totals? so the
Oh, I'm
public hears the
sorry.
total?
So yeah, that passed, I believe. What was that? I have 8 to 4. Is that what you have? I'm sorry. Thank you, Senator.
Yes, that's what I have.
So that bill
Mr.
has
Chairman.
been voted to be sponsored by the committee. Okay, next item is item number 5, industrial revenue bonds. Okay, I think are we gonna, Josh, how are we gonna do this? Okay, we want to do the bill or you want to do the presentation first? Let's do,
Up to you, Mr. Chairman. We have a bill.
how
we
about
have
the
some info
presentation?
From,
And that you worked so hard on that you got all ready for us, Donna? That'd be awesome. Okay, thank you for your hard work on this.
You're welcome, Mr. Chairman. Yes, you should find a research memo under tab 5. And after the previous presentation I made to the Revenue Committee on Wyoming and New Mexico's industrial revenue bond statutes, the committee asked me to look at more states, find some other states that utilize IRBs as an economic development tool. So I chose to look at 8 states, the states that surround Wyoming and also Kansas. And of those 8 states, only Kansas really utilizes IRBs in a big way. And Kansas is very similar to New Mexico. I'll just kind of walk through this memo and tell you what I found. Like New Mexico, Kansas cities and counties regularly use industrial revenue bonds to encourage companies to either locate or expand their facilities in their communities. And again, like New Mexico, most Kansas IRB issues are taxable bonds. Most are self-financed by the company that's borrowing the bond revenue. And most of those IRB deals offer property tax or sales tax exemptions. So the IRBs really serve not as a means of financing development, but as a vehicle so that companies can realize those tax incentives. Kansas passed their IRB enabling legislation. It's called the Economic Development Revenue Bond Act in 1961, which, by the way, was just 4 years before Wyoming passed their legislation, the Industrial Development Bond Project Act. The next year, 1962, the city of Wichita issued its first industrial revenue bond to Learjet to attract that company to open their first US manufacturing plant in Wichita. And since that time, Wichita, and they're certainly not the only Kansas community that does this, but Wichita has utilized IRBs consistently over the years. The statistic I found was they've issued 300 IRBs totaling more than $6 billion since that first one in 1962. Kansas cities and counties are required to report their IRB filings to the Kansas Board of Tax Appeals. And the board publishes an annual report on their website, which if you're interested in looking at that, the footnote 4 on page 2 gives you the link to that website. I looked at the annual report for 2018 just to get an idea of how many IRBs are typically issued in a year in Kansas, and found that in 2018, a total of 35 Kansas cities and counties issued a total of 88 industrial revenue bonds. And on page 2, I kind of break out the types of bonds issued by cities and counties according to county size. So you could see how they're utilized by small communities versus large communities. In 2018, they were used for a variety of projects that included commercial real estate developments, apartment buildings, hotel construction, and construction equipment of warehouse and distribution centers. Bond principal amounts ranged from about 690,000 to 102 million. And I apologize, there's a little bit of a typo at the top of page 2. So that maximum figure should read 102 million, not 120 million. Let's see. So as I mentioned before, if you flip to page 4, most Kansas cities and counties offer property tax abatements as an incentive for companies to locate in their community. The Kansas tax code, not the IRB legislation, is what limits the length of time that communities can offer these property tax abatements. So that's limited to a maximum period of 10 years. And property tax exemptions are prohibited for retail enterprises or retail projects. Local governments may exempt up to 100% of property taxes minus any levy that local school districts have made for capital school construction projects. On page 4, I also compare Kansas property tax rates or average property tax rates to Wyoming's average tax rates, property tax rates, just to show that in Kansas, that property tax exemption is probably a pretty significant incentive. Kansas has higher both commercial property tax rates and industrial property tax rates than Wyoming does. The cities and counties calculate the percentage of property tax exemption based on a number of criteria. And if you turn to page 5, figure 1 shows the criteria utilized by the city of Wichita and surrounding Sedgwick County. So they have a formula. They provide a certain percentage of property tax abatement based on the number of jobs that the project is going to create, based on the amount of capital investment. And then they consider then there's some additional considerations such as does the project utilize state, federal, or utility incentives? Are they located in a redevelopment area? There's a list of the additional considerations. And then under that table, there's an example project, and it shows how the community applied those different criteria to come up with a 90% abatement for this hypothetical project. The IRB agreements frequently require partial payments in lieu of taxes or pilot payments. Typically, those pilots are on a schedule that gradually increases over time. And in the last paragraph on page 5, I give an example, an IRB that was issued by Shawnee, the city of Shawnee, Kansas, to Airtex. Did not require any pilot payments for the first 6 years. So property taxes were, completely exempted during that time. And then the pilots gradually increased from 30% in year 7 to 70% in year 10, which would be the final year that property tax exemptions could be offered under state statute. In addition to property tax incentives, Kansas IRB deals often offers sales tax exemptions as well for labor, building materials, machinery, and equipment that's purchased for the facilities being financed. And again, that probably is more of an incentive in Kansas than it would be in Wyoming, because Kansas sales taxes are also higher than Wyoming's. In the middle of page 6, you'll see the average sales tax in Kansas is 8.7%, which compares average sales tax in Wyoming is 5.3%. And I know the last time I presented, there were some questions about what happens if the the borrowing company defaults on their payments, on their bond payments, or what happens if the company defaults on making their pilot payments. So I specifically asked, as part of this research project, when I talked with a bond counsel in Kansas, I asked those questions and was told this bond counsel has been doing IRBs for 25 years of her practice, and she said she could only remember 3 instances where companies defaulted on IRBs. And in those cases, they were companies that probably were not creditworthy in the first place, and the local governments didn't do their homework in vetting them. She said that can be prevented if local governments review a company's financials to make sure they are creditworthy. But in the event of a default, the bond counsel explained to me that it's typical in any kind of bond issue to have the proceeds from the issue deposited in an account that's maintained by a trustee. And so should the company borrower default, the trustee takes possession of the proceeds on behalf of the bond holder. The bond counsel also told me she could not recall any company that ever defaulted or refused to make their pilot payments under a Kansas IRB agreement. I did notice in my research that the city of Wichita and surrounding Sedgwick County have established procedures to ensure compliance with IRB tax incentive agreements. So while they grant tax abatements for the statutorily allowed period of 10 years, they review those abatements after 5 years to make sure the company is complying with all the terms of the agreement, such as the creation of high-paying jobs. So approval of continued property tax abatement is contingent upon the company meeting those performance criteria. And if the company is not meeting those criteria, the city or county can exercise their clawback right to ask for some of those abated taxes back. And then last, just to let you know, the other 7 states I looked at, which were all the states that surround Wyoming, really don't seem to utilize IRBs in a large way. What I found is that most of the few IRBs that have been issued by those states in recent years have been mostly tax exempt qualified small issue bonds. So as you may recall from my previous presentation, those tax exempt bonds are regulated by Internal Revenue Code regulations in terms of the dollar amount and the type of project that can be financed. In all those states but one, the IRB statutes do not provide property tax exemptions for bond finance projects. The only state that does allow property tax exemptions is Utah. But based on interviews with a number of different people in Utah, that doesn't seem to be marketed as an economic development incentive. And it also doesn't seem to be commonly known. The people I spoke to in Utah didn't seem to be very familiar with their industrial revenue bond statute, which tells me they don't utilize it very often. So now I'll stand for questions.
Members, any questions? Ms. Shipper, Mr. James, Senator James.
Thank you, Mr. Chairman. I was just curious if there are any states out there that have customizable IRBs where If a private sector company were to approach a state, if they had an IRB where they could customize and pick like a tax abatement or some sort of incentive that they could build an IRB that would suit them. Because not every company is the same. Not every IRB is going to fit every company. So I was just curious if there's something like that out there.
Okay, Ms. Shippen?
Mr. Chairman, Senator James, I believe those, whatever tax abatements a local government offers, that's negotiated with the company as part of the IRB deal agreement. So I'm assuming they do kind of customize it to what would be attractive for that company.
Okay, any other questions? Okay, well, thank you for all your hard work on this. Really appreciate it. Okay, Josh, do you want to? Oh, okay, Ms. Johnson.
Mr. Chairman, members of the committee. This is Bill Draft 22 LSO 206, which is titled Industrial Revenue Bonds Payment in lieu of Taxation. What this technically does is for industrial development projects initiated under this section, they're exempt from ad valorem taxation during the bond term. And then during that term, in lieu of taxes, they owe 50% of the share each would have paid. And then Section 2 clarifies that the changes to the statute would only apply to projects initiated on or after July 1st, 2022, which is the effective date of this act. And I would stand for any questions.
Hey, any questions? Okay, members, any questions? Simple little bill. We're just trying to dig this program out of the, knock the dust off it, maybe see if we can get it moving a little bit. So, okay, well, thank you so much. Are there folks here that would like to offer any public comment on this bill? Anybody online? Okay, seeing none. Okay, members, what's your pleasure? Okay, been moved by Senator Baldwin. Seconded by Representative Sweeney. Okay, any discussion, any amendments? Simple little bill.
Question.
Question being called. Please call the roll on LSO draft 22 -0206.
Senator Baldwin.
Aye.
Senator James. Senator Pappas. Senator Schuler. Representative Baker. Representative Gray.
Aye.
Representative Hallinan.
Aye.
Representative Henderson. Representative Jennings. Representative Roscoe.
Aye.
Representative Sweeney. Representative Yin.
Aye.
Co-Chairman Case. Chairman Harshman.
Mr. Chairman, I'd like to vote no. Can I do that before it closes?
With that, there'll be 3 no's, so that passes.
Vote is 9-3. Okay, members, next on our agenda. We're at item number 7, review of monthly ad valorem taxes. Got a little some cleanups on all the work we've done the last couple of years on this issue. Josh?
Mr. Chairman, Yeah, this is 22 LSO 234 monthly ad valorem tax revisions. There was a working group that looked into this bill draft and addresses some of the concerns that have been brought up from the bill from last year. Let's get into it, Mr. Chairman, on page 2. It's a change to the timing of when these payments would be made. In the current bill, it would be on the payment would be made on the second month following the month of production. This would require a report on the second month following the month of production, and requires the department to provide an invoice, and then requires the payment on the third month following the month of production. Also on page 2, line 16 clarifies that the payments are calculated by the department rather than the taxpayer. Over to page 3, subsection D. This makes a similar change to those producers that pay annually based on the if their liability is less than $30,000. Again, just changes the report date to the 25th day of February in the year following the year of production, and then requires an invoice, and then requires payment on March 25th of the year following production. Also delete some language on page 4, lines 4 through 7, just that nobody seemed to know why that language had been inserted in the first place. Then, Mr. Chairman, subsection G. This is the deferred payments, the 2 years that have the 2 years that are where the monthly payments are moved up, and how to address those annual payments that would be during the same time period. So what this does, Mr. Chairman, first, the change at the top of page 5, just clarifies some language there that was confusing as to whether the language or whether the full tax would not be due if you paid only the 50% of the 2020 production. So this clarifies that that amount would be due under the deferred tax procedure, unless just that remaining 50% from 2020 is paid by December 1st of 2021. And then all taxes from 2021 are paid through deferred payments. And then it clarifies on page 5 there that the county is responsible for tracking the deferred payments and sending an invoice to each taxpayer not later than October 1 of each year. The remainder of this change is related to different things that can apply to the deferred payments. So first, Mr. Chairman, on page 6, if a taxpayer fails to make one deferred payment, the penalties and interest are applicable from the date of the missed payment. On paragraph 2, if a taxpayer fails to make a second deferred payment, the total remaining amount of deferred taxes shall be immediately due and payable. And then in paragraph 3, if a taxpayer sells 75% or more of the taxpayer's interest in the mineral estate in the county, then the total remaining amount of those deferred payments would be due, immediately due and payable. In section 2, there's an additional appropriation of $3 million from the LSRA to make loans to counties to cover funding shortfalls. Again, that was something that was in the previous version of this bill, but a little more, a little additional funding what might be necessary. That I take any questions, Mr. Chair.
Members, any questions? President Jennings.
Thank you, Mr. Chairman. Mr. Anderson, I understand, I remember why this came about. Can you refresh my memory what the problem is that we're trying to solve here? What were there problems for the county and how this came about? Could you refresh us a little bit on that? Thank you, Mr. Chairman.
Go ahead.
And Mr.
Josh.
Chairman, just to clarify, do you mean the whole change from annual payments to monthly payments in general, or just this bill? Yeah, so Mr. Chairman, just a couple of things. The first changes were suggested by the Department of Revenue to address some issues they have. So sub changes to subsections B and D. Change to subsection G. Again, the first change was to clarify some confusing language, I think. And then the change to the bottom of page 5, top of page 6, there was concern that under the existing bill, the penalties would be calculated from the date from January 1 of 2020. And there was concern that that might be an extreme way to handle those missed payments.
No, okay. Senator Schuler.
Thank you, Mr. Chairman. Just a question. I know I had a couple of questions actually from my county about the 8%. And kind of wondering why we didn't go with something a little higher. I couldn't remember exactly where we, finished with that particular percentage, other than we thought that might be pretty reasonable for the folks doing business. But was there anybody in the working group or anybody else that has asked that question about, has there been any interest in maybe bumping that up, or are we good with that?
Go ahead, Josh.
Mr. Chairman, I'm not sure there was any discussion on that. I'd defer to anyone in the working group if they might have additional input on that, but not aware of any discussions around that number, Mr. Chairman.
You know what? This was the coal bankruptcy, mineral bankruptcy task force that management council formed when we had a rash of these bankruptcies and delinquencies. Which of course, I don't know, nearly 70% go to the local school district, the rest county commissioners mainly. And particularly in Campbell County, but there were other counties as well. And so we've talked about this concept going to this monthly payments, much like severance tax. I believe the history of severance tax was similar back in, and because it's assessed basically the same, I think, looking at assessors out there. And so then how do you do this double taxation piece? I think the working group, I wasn't a part of that, but I think they just kind of negotiated it out where everybody could kind of support it. So I don't think it was anything magical. I think it was just what they could support. I think Josh has more
Mr. Chairman,
now, jogging his memory.
Now I'm remembering, Mr. Chairman, so that 8% was just to make up the full amount of unpaid taxes within whatever the timeline was
12 years.
that we
I think,
picked.
12,
Yeah.
13
years,
years.
And so whatever that was that was why that number was picked, was for the time to how long it would take to repay that amount.
Yeah, that's right. It's 112. And I'm sure there's assessors here. We're following those as well. Okay, Mr. Co-Chair.
And Mr. Chairman, you're exactly right. This is kind of something similar to what happened with severance, but there's one key difference. When they cut over to monthly payment of severance, they forgave the taxes in between. This, we're actually going to collect the taxes due during the transition. I mean, this is a huge give and take by a lot of people to move it where mineral companies are actually going to pay a little bit extra overall to move their tax rates up a full year by the time this is all gone, so that it's on the monthly schedule. So that's huge. That's great partnership between them, county assessors, Department of Revenue. A lot of people really worked hard on this.
Very good. Okay, any other questions? Stroll down memory lane. It's only been a few years ago, but this is really an important, and this is one of those policy items that doesn't get a lot of attention. I mean, most folks in Wyoming don't know about it, but this is really a huge accomplishment by the legislature. Okay, and like I said, good co-chair said, all the cooperation in our minerals industry. Minerals are, I just want to say again, I work in public education. What minerals does for K-12 education in this state is incredible. And I just don't think you can say that enough publicly. I think, we're like every other state. We fund our schools with property taxes, but you just saw, we've got the lowest property taxes in America because minerals are paying half our property taxes and assessed at 100%. And it's been an unbelievable blessing. But so we're really thankful for the mineral industry on that and this partnership and cooperation to make this policy come to fruition. So we got a little cleanup as we've learned. And so we'll make sure we work hard to get this bill to the finish line. Director, do you have some more comments on this?
Mr. Chairman, Brenda Henson. So within this draft, the Department of Revenue's request is through page 4, line 15. And the reason for that request was basically so we could implement this in the timeline that the legislature required. As stated previously, the current law as it's written today requires producers within the state of Wyoming to report and pay those ad valorem property taxes by the 25th of the second month following production. That required those producers to, one, identify where their production occurred, determine what county, what tax district, what last year's mill levy was, and then to submit payment at the same time they reported the value. What this amendment does is allows them to report basically their severance tax amounts that they are currently reporting in statute. But then it puts the burden on the Department of Revenue because by group ID, we know which county, we know which school, which tax district and what those mill levies were for last year. So what this amendment does is it still requires the producers to report by the 25th of the second month following production. We then will do a calculation and we will send them via electronic email an invoice that will identify the total amount that needs to be paid. And then they'll have until the 25th of the third month following production to remit that money. At that time, then we will take that money, distribute it out to the county treasurers of the applicable counties. That's all the amendments are doing that go through that page 4. The rest of the amendments are specific to that delayed payment. Current law requires that the taxpayer has the ability to not pay second half of what is 2020 production, which is 2021 tax, and all of 2021 production, which is 2022 tax. They have the ability to delay or defer those payments over that 12.5-year time frame. And so all of the remaining amendments on this bill are specific to how do county treasurers treat those delayed payments. And I appreciate being included in some of the discussions with the County Commissioners Association, Petroleum Association, and the treasurers. But certainly that is not the Department of Revenue's bailiwick because that is all being done at the county level. So with that, I'll stand for any questions.
Okay, thank you, Director.
Thank you.
Okay, we're open for public comment. You can both come up here at the same time. It's even a little faster.
Tag team.
I don't know if you intended that, but that was pretty good timing. Okay.
Good afternoon again, Mr. Chairman. Jeremiah Riemann with the County Commissioners Association. I think you'll see, I think to your question, Representative Jennings, this bill really is to address issues that all of the collective parties have. And I think it's the last pieces that we've found relative to it. Mr. Chairman, I think the two of us in particular want to focus on a couple of provisions, and it's the amendment that I've provided to you. It's the last piece we've been trying to negotiate out and get to perfect it for you, and we did that this morning,
Can
so.
you just pause for a minute?
Yep.
I think both of your amendments came together, did they not? So folks, if you had that amendment on the previous, a bill or two ago, it was kind of behind it.
It's under my association's name, but it's a collective
Yeah.
piece.
Okay, I think we're all there. Okay.
All right, Mr. Chairman, this amendment attempts to address two issues. The first one is in pages 5 and 6, where we're suggesting to take out the terms 2020 and 2021. As all of you know, production years are different than tax years. And as Mr. Anderson has kind of reframed this as the deferred payment, the deferred tax, it really isn't necessary to have 2020 and 2021 in those two particular places. Just kind of confuses a few people. So suggesting to take that out. Mr. Chairman, the change that is being proposed for page 6, line 17 through 23, really does deal with that deferred tax. You'll see in the provision that it suggests that if a producer, a taxpayer sells 75% of its assets, then it would be required to remit the remainder of the deferred tax in that county to the treasurer, to the county treasurer. The problem there is how do you know when you've hit 25 or 75%, and what does immediately mean? And it just drove a lot of questions for all of us as we were working through it. So what we've tried to do is craft something that would ensure that we're talking about sales, divestitures, or liquidations of assets in a particular county. So if a company does that in one county or multiple counties, and they no longer have to report severance tax on their monthly severance tax report, which again, as the director said, is due, that becomes the trigger for payment of the deferred taxes for that county. And what the language suggests is that that would then be due on the 25th day, which is when they would typically be responsible for paying these bills, as we've seen in the statute, on the third month following the point that they no longer are reporting. Now, Mr. Anderson's going to have to clean up the middle provision in there. I put in there Title 39, Chapter 14. I didn't get more specific than that because there are title or Chapter 14 provisions for coal, oil and gas, trona, and all the minerals. So I readily acknowledge that I may not have gotten that right, and he'll have to do an administrative cleanup there. So that's the first part of it. The second part of this question came up, okay, well, when do the penalties and interest apply? The other provisions that you see immediately above it in the draft don't work. So we just say that if you don't pay by that 25th day of the third month, that's the point at which those penalties and interest would apply. The last provision there to page 7 is just to take out the added language. So with that, Mr. Chairman, that's that proposal to address that final issue in the bill. Mr. Obermueller may have some things he'd like to just walk you through relative to the bill and maybe this amendment. And I would just note that at the conclusion of that, I would like to talk to you about the other document that I shared that goes through the loan provision, just so I can explain to you why that number that's in there is what it is. Mr. Chairman, I shared this one several weeks back, and I know it is posted online too. It looks like this.
Very good. Go ahead.
Yeah, okay. So, Mr. Chairman, let me just explain this document. This document was produced after the Appropriations Committee was working through this and trying to figure out, okay, what additional loan amount might be needed to cover that transition. And I don't want to go too deep into that unless you all need it. But I think most of you understand that we're going to have roughly a 3 to 4 month gap as we move into this new payment system in terms of what is actually going to the counties for distribution to the beneficiaries of that tax. So I tried, based on that request from Don Richards and the Appropriations Committee, to get that information back and who may or may not request loans under this system. And so I'm going to try and carefully go through it. Please stop me if you have questions. So the first column on the left, that blue column, is an estimation that I received from the Department of Revenue relative to the maximum county delayed tax for 6 months of next year. That's the figures they had were 6 month figures. I then broke that down into 4 months because that's what we're trying to cover as part of this. So the second column there that's titled at the top, 4 month maximum county delayed tax, is what that particular provision looks like. The next column over, because as you may remember, special districts have to go through their county in order to receive a loan under this, under Senate File 60, as well as this bill. And so there are no good figures for that. So I did back of the envelope math. Roughly, special districts receive roughly 44% of the total that a county would get. So you'll see that the 4 month number for special districts is 44% of the county number. Now, that's not going to be perfect. There are going to be some counties where the special districts may, the percentage may be just a little bit higher, and others where it may be just a little bit lower. It's an estimation. That's the best I could do, or frankly, that any of us could do under the circumstances. The next column is community colleges. Community colleges are a big question mark in this. There is a county loan provision, and back to Senate File 60, there's a school provision. So we took care of the schools there as well. There was a question about where do the community colleges fall out in this. I can't give you a good answer, so I just added them into this equation and gave you the 4 month number for community colleges, and that's what you see related there. I'm going to get into a couple of specifics related to those. You'll see some that are highlighted in red, some that are highlighted in blue. But I'm going to go to the far column where I've got the notes. First off, I went, I called every county, said, okay, tell me whether you're going to offer up an exception to coming into this new system to any companies, as well as are you going to take a loan under this for yourself, for your special districts and the like. What I found in that exercise is that 7 counties do not intend to grant exceptions to companies, and 11 counties have not received exemption requests, but would consider those. Say the timeframe's probably closing on whether they should do that or not, but nonetheless, it is a provision there. 2 counties don't have mineral ad valorem, so they're taken out of the equation. And then we had 3 counties that have granted some form of an exemption. Now, Campbell County is one of those counties that is not going to offer an exemption moving forward, but had negotiated agreements with a couple of entities, which you see listed there prior to us making this transition into House Bill 159 and then Senate File 60. 2 other counties, Lincoln and Sublette, have granted limited exemptions to some companies, and you can see those totaled there. Moving back up, if you look at Campbell County, they do not intend to take a loan for themselves. So we took $9 million off of the table for Campbell County. They may take a loan for their special districts. That's to be determined. Moving down, Converse County is in the same situation. They're not going to take a loan on the county side, but they may take one for the special districts there. Laramie County does not intend to take a loan for any of its entities. So that's why each of those are in red. Lincoln County is in blue because they may take a loan under this provision, but they granted some exemptions. Those exemptions total roughly 8% of the total ad valorem that they collect. So I reduced their numbers by 8% in the calculations here. And then if you go down to Sheridan County doesn't intend to take any loan funds, and neither does Sublette County. There are some others that are really small numbers on here. You could look at like a Goshen County. I don't expect that they're going to take a loan, but they didn't want to foreclose on that potential if necessary. So with all of that, going to the second page, the potential county 4-month delayed tax is $27 million. Special districts are $12 million. And community colleges come just short of $3 million. So the total potential delayed tax is $42.8 million. I took 23 off of that because those are counties that decided they're not going to take loans, or they gave some sort of an exemption that reduced that number. So the total amount of loan that is potentially needed here is $19.5 million. You've already appropriated through Senate File 60, $16.7 million, which means the total remaining amount that's needed to cover the loans that may be requested is $2.8 million. That's just slightly more than the community college number in here, if that means anything. But with all that, Mr. Chairman, again, this has been reviewed by your staff, by your LSO staff. I believe Mr. Tempty as well has reviewed it. I hope that it is good information, but that's how we got to the $3 million that you see in the bill here. Mr. Chairman, I take any questions on that.
Okay, any questions? Okay, well, I appreciate your work. Yes. Mr. Obermuller?
Afternoon, Mr. Chairman, members of the committee, Pete Obermuller, President of the Petroleum Association of Wyoming. It's a long day for you all. Appreciate your diligence. I'll just add a couple of things. The amendment, nothing related to the loan part, but the amendment that Mr. Riemann talked about is a joint effort. We agree with the amendment and think that it solves our questions regarding timing and all of that. So that is good. Just a couple of things, if you'll indulge me, Mr. Chairman. First of all, thank you for your comments just regarding oil and gas contribution to K-12 education. I'll just note in 2020 is historic, a bad year for my members. We still contributed $545 million to K-12 education in 2020.
I used to see some information, not to get off hill, but if you have it, maybe share it with this committee. But I used to always recall, like, the average person in Wyoming, the average house value would not pay enough property tax to even educate one of their children for K through 12. And it's always stuck in my head, like just one gas field in Wyoming, the Pinedale Anacline, was like 13,000 Wyoming students. And I don't know if you have some info like that, maybe refresh our committee a little bit. It's good to kind of put some of that in perspective once in a while, I think.
Mr. Chairman, I certainly do. We did that exercise with regard to the Pinedale Anacline. Property taxes paid over 15 years, estimated what similar property taxes would be from an individual. And you're right. if you paid about the average property tax over 15 years in your home, you have paid for one student to attend K through 3. And the Anticline by itself over 15 years paid, I can't remember the number, it is something like 13,000 students to go through K through 12.
Yeah,
So the disparity is enormous.
or the blessing, we should say, is enormous.
Right.
Yeah.
Regardless, it's a lot. We try to think of different ways to couch it because it's big numbers and it's hard to
Yeah, it
it's
is.
hard to wrap your mind around. But we're happy to be a part of it and happy to be a part of Wyoming's future. So the last thing I would say, Mr. Chairman, I just want to respond to Senator Schuler real quickly, just to set her county at ease or constituents who asked about it. It's been a long journey to get here on where we're at. And essentially just real quickly to remind you of the steps, the initial proposal by some county officials was that we switch to this new payment and then pay the back ones in 18 months. That was a non-starter for my members. And then the original bill that passed switched that on its head and it went to getting halfway there by 2027 and then perhaps never getting all the way there. And so we went to this 8%, which is 12 and a half years. It's not precisely what the counties wanted. It's not precisely what we wanted. But then language like it's in this amendment today puts some more limitations on it in terms of divesting of your assets and leaving the state and obligations in that case and those sorts of things, which we are okay with. So I can't promise you, Mr. Chairman, we're all gonna kind of hold hands on this into 2022 and jump, and we'll see how it goes. I can commit to you that I will do my level best to educate both my members and non-members about how this is going to work. But there's going to be hiccups on this moving forward, and we'll collectively do the best we can.
Yeah, keep working. Okay. Any Senator Schuler?
Thank you, Mr. Chairman, and thank you for that. That helps. I couldn't remember all the background on it, but I do think that the amendment that you guys brought, I think is reasonable. And I think that makes total sense because it kind of gets back to the concern counties had in the first place is what do we do if companies, go bankrupt and they leave us holding the bag? I think what we've gone to is going to be much, much better. But I do like the fact that your amendment, instead of having the counties have to have that, if they divest or they liquidate, having to have it paid immediately, going along with the third, the 25th day of the third month following the month. I think that goes along with the rest of the bill, and I think it makes sense and it's more reasonable for our producers. So it was a good catch. Thank you.
Mr. Chairman, just one final thought that I wanted to just make sure everyone realizes is that in the vast majority of cases, tax obligations are taken care of in the private sale. They happen immediately because they're dealt with when the sale happens. All of this is backstop in the event that fails for some reason. But for the most part, it happens immediately.
Okay, very good. Okay, anything else? Okay, appreciate your work on this.
Thank you, Mr. Chairman.
Testimony. Thank you. Any other members of the public would like to comment on this bill? Anyone online? Please. Love to hear from you, Mr. Assessor.
Good afternoon, Mr. Chairman, and members of the committee. Pat Meyer, Park County Assessor. I'm just going to talk about this bill, mainly the loan value of what's going on with this in the 4 months as compared to the 6 months, and tell you a little history. As Mr. Obermueller said, 2020 production was terrible. I mean, we dropped over $100 million in 1 year, and so everybody was affected. Well, 2021 came around. We not only made up that $100 million, we went way over that. But we're not getting that money for another 12 and a half years, So that was huge. So we didn't get to offset it. So I'm more talking about what we budgeted for, that second half payment that is being deferred. What I wanted to do is be able to borrow that money even to the special districts who needed it. I don't think there's been very good communication. I don't think in Park County, for one, I don't know who was talking to the special districts. I actually talked to the colleges and went over everything with them. But as far as I know, special districts really don't understand what's going on, or if they're going to get their money they budgeted for. Now, I understand 2022, now, you know that oil and gas, it goes up and down so much. Right now, it's looking pretty good. You know, we're saying, though, from 2020 year, for the 2021 assessment year, we were at 626 million. With the new production and stuff, if we would have got the annual payments, we'd have been up 773 million. Oil and gas production's huge. It goes up. Right now, Park County local valuation is 69% of the valuation. In 1982, oil and gas paid 90% of everything. And it went up. It took us a long time before local valuation was catching up with them. So what I wanted to do is get the money for the 6 months and then use the 2022 to offset that great year that we had and keep in line. I think it would be a lot better for the special districts. It would be better for the county. It would be better for the colleges if we could do that. There was no incentive for the big companies that I contacted to just want to keep paying it because they get 12 and a half years interest-free money. You know, why would they not do that? They can use their money for that. So, you know, there was no incentive for them to stay. At first we were gonna, and then all of a sudden Park County did the same thing as other counties. We'll just have everybody go to the monthly payments. Let's start. So the only thing my county commissioners were asking, and I was asking, instead of the 4 months, let's try for the 6 months and start over again. That way, everybody could get their money if they wanted. Some of these special districts have pretty good money in their reserves, so they probably won't need it. But then there are some, and the colleges are hurting, as I'm sure you know, throughout, they're just scrambling all the time. So that's what I would propose. I got no problems with the amendment. I never cared for the bill. I've said that from the start, but I hope it works like it's supposed to. It's not a bill anymore. It's going to be a law. So I hope it all works and for everybody. But with that, I take any questions.
Representative Gray.
Thank you, Mr. Chairman. Mr. Meyer, I've always had this concern on this approach that for something so important, I keep hearing that a lot of people say we're not 100% sure if it's going to work. I mean, does that make sense to you for this huge industry that provides that much revenue to the state that we're doing something that there seems to be, yeah.
Representative Gray, I've heard from other oil and gas people, they said, don't do it. That have been in the business and have retired. They go, it's not going to work. I don't really know, I don't know if you're going to stop the bankruptcy. If they stop production, how quick we're going to get them and how we're going to put liens on their place and do that. I really don't know if this will work, I mean, I don't know. That's why I wasn't for it. But Park County also was involved in a lawsuit of a company that did go bankrupt. And I know we lost a bunch of money on it. And would this have saved us? I don't know yet. I'm not an expert on that part, Representative Gray. I don't know. I'm skeptical. Okay.
Okay. Thank you. Any other questions? Okay, thank you. Appreciate your testimony. Any other members, public would like to comment on the bill? Okay, seeing none, no one online. Okay, so we'll close public comment. Members, what's your pleasure? Move the bill. Seconded by Senator Baldwin, moved by the co-chair, seconded by Senator Baldwin. Okay, members, any amendments?
I offer the amendment.
Mr. Co-chair.
Mr. Chairman, I would offer the amendment this one with the agreed upon language between the county commissioners and the Petroleum Association.
Okay, it's been motion seconded by Senator Schuler. Further discussion? Okay, seeing none. All those in favor of the amendment, please raise your hand. Okay, 1, 2, 3, 4, 5, 6, 7, 8. Those opposed? 1, 2, 3. Okay, that amendment has been adopted. Any other amendments? Other amendments? Okay, seeing none. Sensing you're ready to vote. Okay, we'll call the roll on LSO Working Draft 234, monthly ad valorem tax revisions.
Senator Baldwin,
Aye.
Senator James, Senator Pappas,
Excused?
Senator Schuler, Representative Baker, Representative Gray,
No.
Representative Hallinan,
Aye.
Representative Henderson,
Excused?
Representative Jennings, Representative Roscoe,
Aye.
Representative Sweeney,
Aye.
Representative Yen,
Aye.
Co-Chairman Case,
Aye.
Chairman Harshman,
Aye.
of 8 ayes, 4 noes, 2 excused.
Okay,
Passes.
thank you very much. The next item. Members, I think we can knock out one more for the break. Next item is the repealing of the inheritance tax. Who's up on that? Josh? Item number 8 on your agenda.
This bill's a killer.
Mr. Chairman, this is 22 LSO 19, working draft 0.3. This came out of the May meeting. We had viewed different amounts of revenues that come to the state. The inheritance tax no longer really applies because the way the federal government has structured their inheritance tax. Previously, our tax would take advantage of any amount of credit allowed for payment of state taxes. So it would allow the state to take a share of the federal inheritance tax. That has gone away. So there's no large amounts of revenue collected through that tax, but we did get testimony that there's still a $10 fee on the books and to certify that tax is not required. So there still are some of these $10 fees that get collected. So there's 2 different approaches the committee could take. This bill just repeals all of the inheritance taxes. It's no longer applicable, which is 39, 19, 101 through 111. If you just wanted to repeal the fee and leave that on the books in case the federal government were to allow for that state tax credit, then you could just repeal the fee, which is in 39, 19, 102A. And that's the bill, Mr. Chairman. I take any questions.
Thank you. Questions, Mr. Co-Chair? Did you have a question? Okay, sorry. Anyone else? Questions? Okay, so you mentioned the 2 ways to do this. So, I mean, so we'll take an amendment, obviously, if we want to leave that, just repeal the fee.
Correct, Mr. Chairman. Yeah, like I said, 2 ways to do it. This approach, as you see before you, would repeal the whole thing and currently, which is not currently applicable. But if there was an interest to leave that on the books and just repeal the fee, again, it would be 39, 19, 102A would be the repeal.
Okay, very good. Any public comment? Seeing no.
Mr. Chairman, we
One
have
on-
Brett Moline from Wyoming Farm Bureau.
Okay, perfect. We have some public comment. There he is. We see you.
Mr. Chairman, can you hear me all right?
We can hear you. Welcome.
Mr. Chairman, once again, Brett Moline from Wyoming Farm Bureau, taking an unusual stance in front of this committee in support of a bill. To me, if I'd rather have you just repeal the whole section rather than repeal the fee portion. It's probably costing you more to collecting than what you're bringing in, but with that, Mr. Chairman, committee, I'll sit for any question, trying to be brief.
Okay, thank you. Questions? Could you represent Gray?
Thank you, Mr. Chairman. Mr. Moline, just curious, do you have any documents on some of the real world effects of the federal inheritance tax on ag? Just wondering if you have any documents on that, just in general, and some of the proposals that are out there, what the effects would be on changes that are out there at the federal level.
Mr. Moline.
Mr. Chairman, Representative Gray, I don't have any in front of me, but I know this has been an issue at the federal level for American Farm Bureau, and I can see if I can gather some things up and get that information to you. It is a serious consideration, especially now that they're lowering the limit of what is subject to inheritance tax. I'll do my best to try to get you some information as quick as possible.
Okay, thank you. Follow up.
Yeah, thank you, Mr. Chairman. Yeah, I would really appreciate that because it's a very important issue and they're talking about raising the cap, like you said, and it's just really bad for ag and that means bad for our state. So I think definitely we should be aware of that in the Revenue Committee. So thank you. Thank you, Mr. Moline.
Okay, very good. Thank you. Any other questions of Mr. Moline?
Mr. Chairman, if I may, I do want to emphasize this is an issue that's much larger than just agriculture. It does affect the industry that I represent, but it affects society in whole.
Very good. Okay, thank you for your comments.
Thank you, Mr. Chairman.
Any other public comment? Okay.
Mr. Chairman.
Yeah, go ahead.
I just want to, I think I meant lower the cap. I've had a little bit, anyway.
Okay.
Sorry about that.
Okay, very good. No, we're good. Okay. Any other public comment? Okay, members, what's your pleasure on this bill? Been moved by Senator Baldwin, second by Mr. Co-Chair. Okay, members. Any amendments? It's a big bill. Okay, Representative Yin has his hand up.
Mr. Chairman, so I will make the amendment to make this only repeal 3919-102A. And I'll explain it if I get a second.
Is there a second? Seconded by Representative Roscoe.
Mr. Chairman, so I think getting rid of the fee just makes sense. I'm fine with that. The reason that this was put in place was because there was a federal tax deduction on inheritance taxes paid to the state. So if a state had an inheritance tax and the federal government had a deduction, and I think LSO can correct me if I'm wrong, because I might be wrong, we would be able to have a tax on that inheritance, and then that person would be able to deduct that tax from their taxes. So they essentially don't have any increase in taxes, while as the state, we get revenue. And so if that ever happens again, I mean, I think ultimately it makes sense for us to keep the law in place as it is. But please correct me if I'm wrong. And if I'm wrong, I'm happy to withdraw my motion.
I'm going to go to Josh on this. Josh, any comments on that?
Yeah, Mr. Chairman, that's correct. That's how the tax works. If you look at 3919-103B, the basis of the taxes, the amount of tax is the maximum state death tax credit allowed to Wyoming. The state has a credit against federal taxes. And it goes on from there. But essentially that was how the tax was structured so that it would be cost neutral to the estate.
So correct that and be sure that's a tax credit, not a deduction. So 1-for-1 credit, I think.
Correct.
You said credit, Representative Yin said deduction.
That's a mistake on my part. Mr. Chair.
Okay. Which makes sense. Okay. Any other discussion on the proposed amendment? Okay.
Mr. Chairman.
Mr. Co-Chair.
This might be a wise move. remember, this tax never cost Wyoming citizens anything. It was just filling the niche of the deductible portion, credit portion of the federal tax. So I think what Representative Yen is saying is maybe we should just keep this on the books just in case, but to not repeal it from the books, but to make the rate 0. And I figure since he's a Democrat, he's got inside notion, track on what's coming down the pipe, and we ought to listen to him. And so it might be good to just keep it prepared. It'll never cost any more of our taxpayers. So it's worth thinking about.
Okay, any other comments? Thank you. Okay. Since we're ready to vote, everyone understand the motion? Okay, although I'm going to ask for a show of hands. All those in favor, please raise your hand. Hold it up there and I'll count. Okay, I'm going to start on the screen. 1, 2, 3, 4, 5, 6, 7 in favor. All those opposed, raise your hand. 1, 2, 3, 4, 5. That amendment has been adopted. Okay, any other amendments on this bill? Okay, seeing none, since you're ready to vote, I can hear the question being called out there. We'll take roll on LSO draft 0019, inheritance tax repeal.
Senator Baldwin,
Aye.
Senator James, Senator Pappas,
Excuse?
Senator Schuler, Representative Baker, Representative Gray,
Aye.
Representative Hallinan,
Aye.
Representative Henderson,
Excused?
Representative Jennings, Representative Roscoe,
Aye.
Representative Sweeney,
Aye.
Representative Yen,
Aye.
Co-Chairman Case,
Aye.
Chairman Harshman.
Aye.
There's 1 no.
Okay, so that has been adopted on an 11-1 vote to sponsor that bill. We're going to take a little break. It's 3:47 now, so let's come back together at 5 minutes after 4. Just about back on time. And next will be, I guess, unless we wanted to knock out this one-way pagers. Let's knock it out. I think we knocked this pagers out. This is going to be another similar one. Let's move on and then we'll clean this up in 5-10 minutes. Okay, we're on item number 9, and this is LSO draft 205, repealing the exemption for one-way pagers. Okay, who's gonna, Ms. Johnson, are you presenting? Okay, very good. Yeah, we can get this.
Chairman, members of the committee. This is LSO draft 22 LSO 205, repealing the exemption for one-way pagers. And all this bill draft does is repeal 3915-105A 8K. And then in the staff comment, it just gives you what the statutory language is that's being repealed. And I would stand for any questions.
Okay, any questions? Okay, thank you. Any public comment? No one, anyone online? No public comment. Nobody paging in. No, yeah, not anymore. Yeah, okay, members. What's your
Move the
pleasure?
bill.
Okay, it's been moved by Representative Yen, seconded by Representative Schuler. Any amendments? Since you're ready to vote, please call the roll on LSO draft 205, repealing the exemption for one-way pagers.
Senator Baldwin,
Aye.
Senator James, Senator Pappas,
Excused.
Senator Schuler, Representative Baker, Representative Gray, Representative Hallinan,
No.
Representative Henderson,
Excused?
Representative Jennings, Representative Roscoe,
Aye.
Representative Sweeney,
Aye.
Representative Yen,
Aye.
Co-Chairman Case,
Aye.
Chairman Harshman,
Aye.
7 ayes, 4 noes, 2 excused.
Is that? Okay, I had 8 ayes.
Oh, 1, 2.
Just make sure.
My apologies, 8 ayes.
There's 12 of us, I believe. Yeah, okay, very good. Okay, members, we'll take a short break now till 4:05.
Think of all the revenue that repeal of that exemption.
Okay, members, we'll get started. Got one more bill now, where we are on LSO draft 287. It's number 10 on your agenda item, state assessment of independent power producers. Josh, take us through the bill.
Sure, Mr. Chairman. Yeah.
Maybe a little background why we have this bill.
Yep, 22 LSO 287. This again came out of the September meeting. There was some discussion on the assessment of these independent power producers. And the Department of Revenue indicated that they weren't sure whether they had the authority under current law to do the assessment of these at the state level. There was a working group that looked at this issue. The bill draft, Mr. Chairman, on page 2, it just says that adds to the list of things that the Department of Revenue is required to assess for property tax purposes, and says property of independent power producers pursuant to subparagraph Q2B, the department may, upon request, provide information on the valuation and assessment of property to the county assessor of the county where the property is located for the purpose of reviewing the valuation or information used in the valuation. And then as used in this paragraph, independent power producer means a person operating a facility for the generation or transmission of electricity for wholesale. That's the bill, Mr. Chairman.
Okay.
Take any questions.
Okay, any questions? Okay, Representative Yin has a question.
Mr. Chairman, thank you. Mr. Anderson, do you know if this bottom sentence would wrap in net metering customers as independent power producers?
Go ahead. Mr. Co-Chair wants that one.
Mr. Chairman, I don't believe it does at all. This has to do with utility scale power installations that come under the qualifying facilities for PURPA. By the most part, not all of them do. Some are bigger than that. So these are big solar farms and big wind farms. And they're compensated based on rates that are paid by the utility, not the net metering rate. So this doesn't have anything to do with net metering. It's not meant to be.
Okay, Representative Baker has a question. Did that answer your question first, Representative Yin?
Mr. Chairman, yeah, I understand that that's the intent. I just want to make sure that it doesn't accidentally do that where someone will try to interpret that it does.
Okay, very good. Representative Baker's question.
Thank you, Mr. Chairman. I just have a question, and I don't know, maybe Representative Yin can chime in on this, but I know that the blockchain committee was looking at some language or some legislation that actually maybe created some zones or some. So I don't know, how would this interplay with that, or does it interplay at all with that if you're aware? Thank you, Mr. Chairman.
Okay. Know the answer to that?
Mr. Chairman, yeah, again, I don't think it was necessarily intended to address that. We can certainly look in and make sure that language doesn't do that, but I don't believe that was the intent, Mr. Chairman.
Okay. Okay, any other questions? Members of the committee? Okay, seeing none, I think we're gonna move now to public comment. And do we have folks online for this? Just so I kind of get it teed up here.
We have a few people on our list, but I would just ask anyone online wishing to comment to raise their hand using the raise hand function.
Okay, and then while we're doing that, let's go ahead and move any folks here in the room. Public officials. I'd first like to start with assessors. Any other electeds that would like to go first?
Mr. Chairman, Dixie Huxtable, Converse County Assessor and Legislative Chair for the Wyoming County Assessors Association. And I'll try to be brief. Talked about this some. So I think we know the background, why this has come. But I'm certainly willing to answer any questions when I get done specific. The Wyoming County Assessors Association met recently and did unanimously vote to oppose this bill. I personally visited with all of the county assessors that currentently have independent power producers in their county,
How
or
many is that? Just
6 currently, I believe. And
Okay.
then there are a couple that have been approved or are in the permit process. So I visited with those as well. All of those assessors are on board with taking on this responsibility for these to be locally
sorry to
assessed.
interrupt, but 6, and then how many are on deck, did you say?
2 that I know
2
of.
more, okay,
Sorry.
great, thank you.
I did want to note that all of those assessors, myself included, anticipate using some third-party expertise to help in the initial years. We're not claiming to be experts on valuing wind farm, but we have reached out. After the last meeting, we did some research to find out where we could get some expert help on this topic, and feel like we could handle that for our county. For the vast majority of all of these independent power producers, all of their assets for those particular companies are located in one county. think there may be one or maybe two that will be overlapped across counties, but for the most part, the entirety of all their assets are in one county. They fall within the county boundaries. And specifically, those entities appear to have been created specific for that facility. There may be a parent company up the line that they were a subsidiary of or created from. But when it comes to valuation, what appears to be happening is we're just valuing, or the state is just currently valuing that independent producer independently, not as a big part. Now, that is not true for the regulated wind farms. Those are valued as a part of the whole company in a unitary method that I'm sure the department can talk about. And they have multiple assets that are being valued across state lines, county lines, different types of assets. But these independent power producers are typically one asset comprised of many pieces, but it's one facility in one county. We feel it's appropriate for the county, the local county assessor to appraise those as we do other property that's located within our county. Those industries that are those facilities that are regulated would remain with the state. We have no problem with that. That makes sense to all of us. But we do feel like it's appropriate that we have the feet on the ground. We know when those come in. We know the information specific to those wind farms, independent producers. We have access to that. I'm not sure if the department has the resources to go out and physically inspect them. I don't know if they do. I don't believe they've been to any of my county recently, but I don't know if that's timing, resources. I don't know. They're relying totally on the annual reports provided by those companies. At least that was the information I was given by the state assessed. And they are the same annual report that is provided to the department for all other facilities, including the regulated. Now, granted, the regulated companies have additional information that they supply. I'm not privy to all that. When I have asked for annual reports, which current law allows me to ask for and receive, in the last couple of years, I have gotten those. When I've asked for the appraisal information, that is not something that they can share. The department cannot share that with me. So I have full confidence that they're using the proper methodologies. I just don't know how they're reconciling them. Are they leaning towards the cost approach initially because there's very little income to support that side of it? Is the depreciation schedule created by the department, or is it created by the taxpayer? Is that depreciation schedule using IRS tax schedule or a financial tax schedule, or is it specifically created for the state? Those appraisal questions are things that we can't answer. If that information came to us, we'd have that information. I'm not going to tell you that if the local assessor did them, they'd go up or they'd go down. I just don't know. I would just have more information to answer the questions that I get asked. It is important to us that you understand that all local assessed properties have oversight from the Department of Revenue and oversight from the State Board of Equalization. We have audits, we have statistics we have to follow, we have reviews. I'm not sure who's reviewing the state assessed property values. To my knowledge, it's the taxpayer. That may or may not be enough, but based on the fact that there's been very limited, I couldn't find an appeal from a state assessed property for the last 15 years. So I hope that that's because the state's doing an excellent job and everything's just right on. But it also leads me to think that maybe there's somebody else that needs to check that oversight. Are those values where they need to be? That's a question for the legislative crew to decide. We will administer whatever you choose to do with these. We would be happy to take them on locally. If it is the purview of this group to leave it in the hands of the state, we would strongly recommend that there be some oversight or overview or audit. The previous director testified that it might be time for the department to have an audit. Again, there hadn't been for many years in a previous meeting. So I think maybe that's certainly something to be looked at if you decide to keep it in the hands of the state. And with that, I would stand for any questions.
Okay, I'll start. Just a quick question on, just for the committee's benefit. Other assets that the state assesses. Can you just give us examples? And are any of those similar to what you're saying, located, solely within one county or primarily?
To my, Chairman, to the best of my knowledge, they are not solely contained within one county. Telecommunications, major public utilities, railroads, pipelines, gas distribution, most of those that I'm aware of are going at least across a county line, if not a state. So if there are some, I'm not aware of them, but I'm certain the department could help me out with that.
Very good. Now, Representative Sweeney, Representative Gray, and then Senator Schuler and Senator James.
Oh, boy.
So we'll just kind of go. Okay, go ahead.
So thank you, Mr. Chairman. So if I heard you correctly, you believe that the state has the ability to identify on public, as far as publicly regulated under the PSC, those wind farms. And they have that ability to assess that and understand that, but they aren't doing a good job evidently on the independent power producers. You feel it's better in the individual assessor's hands. Did I understand that correctly?
Mr. Chairman, Representative Sweeney, first of all, yes, I do believe that the statutes allow for the state to be assessing regulated utilities that include wind farm projects. After the last discussion with the department, it became clear that there was concern whether independent power producers fell within that category that's in current statutes. I can't tell you how or what the wind farm value is on a public regulated company if they've got other assets, because it's all together in one value. I can tell you what the state assesses an independent power producer when it's just one asset in my county. Are they doing a good job? I'm not saying they're not doing a good job, Representative Sweeney. I'm saying I don't know how they're getting that value. And when I ask for copies of the appraisal so I can understand what's being included or what is not, they are not at liberty to divulge that appraisal. They will give me the annual report. I have been given a template of an appraisal model, and I have tried and spent many hours taking that annual report from the actual company, putting it into those models to try to come up with the value that the state did, and I can't get there. My values that I come up with when I do that are higher than what the state has come up with a certified value. And I'm absolutely sure they have reasons for that, but they can't share those with me. So do I have concerns about it? Yes, sir. That is one of the concerns that I do have.
Yeah, follow up. Sure.
So my follow-up to that is, so you believe there's expertise within each county assessor's office, even the knowledge contained today to go out and find an outside contractor to do the assessment on the county level, because I've been told by two different counties that they don't, not from the assessor's office, surely not, but so I would just ask, what assurances do the county's residents have that we have that expertise without going through the state?
Mr. Chairman, Representative Sweeney, I'm not going to say that every office has the expertise currently. As I stated earlier, we have talked as a group, as an association, of helping them find the expertise through a third-party appraiser. We have talked to some that do this for a living and have done it for many years across many states. They are not new to the game, and we have more than one name, so it's not like there's just one opportunity. I will tell you that I have been to many of the same classes that the state assessed people have in the Department of Revenue. The public utility classes, the training that they went to, many of the assessors have went to that same training. I don't do it on a regular basis because I don't have those kinds of facilities in my county. And I, by far, I'm not an expert at it, but I will become an expert if it comes to the local level. And until I feel like I am an expert, I would hire the best experts I could to assure that we're getting the full value for that asset that's in my county, because my taxpayers do know how many wind turbines are out there, how many buildings are there, what kind of generation it's supposed to be generating. But when I look at the appraisal from the state of Wyoming, I don't have that information. That information is not available. So I think I could divulge enough confidence to my taxpayers that we are using experts to get the correct value without having to divulge any confidentiality that the companies would share with us. We would be under the same confidentiality, and we've had the same classes. So I feel confident that we could do it, sir.
Okay, Representative Gray.
Thank you, Mr. Chairman. Ms. Huxtable, one of the things I'm struggling with and what we're hearing from the Assessors Association, I've heard quite a bit over the past few years that there are not the resources in assessor's office to meet the requirements in statute in terms of how often you look at properties. And that's something I've heard has come up in appeals from constituents of mine. And I've heard that in other counties. And yet now we're hearing testimony that counties are willing to pay, and we hear that there's just not enough resources to hire the people to do this in counties. Now we're hearing that counties are so wanting to get into this that they're going to hire third-party people, which is going to be quite expensive to do this if they don't have the expertise, when the state has been willing to take this on in the past. So to me, I'm just not understanding how this is consistent with what I've heard from the Assessors Association, which is that they don't think they have the staffing to do what statute is currently requiring them to do. Why would we change statute to put more on the plates of the assessors when right now this has been allocated to the state before this decision that was made by the current director, which I do think we should provide clarity in statute, but I think the original policy was the correct way to go in light of this fact that counties don't seem able to currently execute the statute. So do you see any inconsistencies with the assessor's position regarding their staffing and now saying they want to take on this new thing and potentially hire expensive third-party help to do this assessment? Thank you.
Chairman, Representative Gray, thank you for that question, because resources in our office have always been a challenge. I believe what you're referring to, property reviews, is the 6-year review to review all property in our county. So in a county such as Natrona, you're talking 40,000 plus parcels. When I'm talking about independent power producers, there may be 1 or 2 facilities for them to check per year. So it's a lot of difference in time for certain. In my county, I have about 7,600 parcels to go out and look at once every 6 years, but I would have 7 farms to visit. I already do that. I already go out there and check them on a regular basis. I already have the independent appraiser and independent appraiser on contract to do 50 plus facilities in my county that I feel they have the better expertise than I, and the time and the resources. So this is not anything new. This is something that we already do. And all of these counties that are involved are on board with that. They've either had outside appraisals for other facilities, or they have had them in the past. So I think the visiting of the facilities, the actual annual inspection, probably have a better chance of the local assessor seeing them every year than you will the state. The state's resources just don't allow them to do that. It's not because they don't want to, it's just that they can't. But we're on the ground and we see them, so we would be inspecting them. We do that already anyway. Most counties already do that.
Okay, follow up?
Mr. Chairman, I just want to clarify that I'm not saying that you wouldn't be able to inspect them. I just think there's a dichotomy in that staffing issues is one of the biggest things I hear from assessors, and yet the statute, the statute goes back to the original policy. What you're asking for is to take on this new function when I'm not sure the current statute's being executed. And that to me conceptually from 30,000 feet up just doesn't make sense, but thank you.
Okay, I'm moving on to Senator Schuler.
Thank you, Mr. Chairman. I think at least one of my questions has been answered. What it seems like to me is there might just be a disconnect between the assessments you're getting from the state and what you think actually, might be out there, and that maybe you're not getting, the bang for your buck. And so I'm wondering, is it because of the confidentiality issues, the state can't share that information? Or what's the reason? That's my first question. Can you give me that?
Mr. Chairman, Senator Schuler, I believe currently, yes, that is the kind of the wall in between there is the confidentiality. They currently have the ability to share upon request the annual report provided by the taxpayer, but they do not have the ability to share the appraisal paperwork that their office does. So the annual report they can share, and we sign a confidentiality statement that we won't share that. But once it gets in their hands, any of the work papers, any of the additional information that they get from that company, they're not able to share that with us.
Okay, follow up.
Just follow up. Thank you, Mr. Chairman. So maybe that's something we can fix because I guess what I see, the biggest problem I see is it just seems to me like it with having two layers of government overreach, it just seems like overkill. The state assesses and then, the county assessors, whether some want to or some don't, having to come in and check and see if maybe they're, and I agree, we want to try and get, the taxes that we're supposed to get. But it just seems like there's got to be something that we can fix in there or tweak so that our county assessors don't have that extra layer of feeling like they've got to go out and reassess what the state's done and find out whether or not these independent, power producers are giving us our fair share. So that might be something we might have to look into, I would think. And I don't know if this bill takes care of that. Wouldn't you agree?
Mr. Chairman, Senator Schuler, absolutely. And one of the things that I did learn in the research since September, when we really took this on as a possibility that this could be the local assessors, was to talk to some of those appraisers that do this for a living on a full-time basis. What would be the difference between the data that you're getting and how it would be appraised for an independent power producer where all the assets are in one county, one entity, versus a regulated company that has multiple assets across multiple jurisdictions? And the answer I got unanimously was a lot of difference. They would not typically be handled exactly the same way. And the department has testified that they have. I'm confident that their appraisal reconciliation probably recognizes that there's a difference. But again, until you can see that, you don't know what that means.
Okay, Senator James.
Thank you, Mr. Chairman. So do you have any evidence and not assumptions to show the state is not doing their job correctly and the companies are not supplying accurate information?
Mr. Chairman, Senator James, no, I do not. As I haven't seen the appraisal, I don't know what has been included in some of their appraisal work papers. I can tell you that some of the reporting that's been done by the taxpayers to the state and then gets forwarded on to the local assessor when it comes to local assessed property versus state assessed property, and then involving the lands that are underneath those wind farms, that if the state picks them up as a state assessed value, then the local assessor has to remove them from the local tax roll. Some of that reporting has been a nightmare. And I'm not pointing fingers at who or why, but new companies don't seem to understand what Wyoming's asking for. And we end up with a lot of work. We rework amended notices because the initial stuff that gets filed with with the state on the annual report is not accurate. And by the time it gets filtered to the local assessor who actually has to identify those acres and take them off the tax roll, we find there's been some significant errors. Now, is that the department's fault? No, sir, I'm not saying that. Is that the taxpayer's fault? They're the ones that reported it, but maybe they didn't have good enough instruction. I'm not going to fault them until we get a chance to work with them, sir.
Thank you, Mr. Chairman. And forgive me on how this sounds. I'm not trying to sound insulting, so forgive me. So earlier you mentioned how you had some numbers and they came out higher than how the state's numbers came out. So you were taking incomplete information, and with your admitted limited knowledge, you came up with different numbers, and that is what you were using to base your concern off of, correct?
In part, Mr. Chairman, Senator James, in part, yes.
And so, and that's why this was kind of brought up and why you're wanting this to be brought forward so the county assessors can do their own assessments on these companies, correct?
Mr. Chairman. So Senator James, part of that was when we were asked questions if we felt like the wind farms were paying their fair share, and to try to determine if they were and if the numbers made sense. Asking for the annual reports, trying to put those numbers into the template model to see how close I could come from what the Department of Revenue is certifying to us. The other thing I did to see how close we were was to look at industrial siting public records. When these companies permit for these facilities, they include in that industrial siting report the estimated cost of the production of this facility, along with their estimate of taxes, property taxes, sales taxes. It's very specific in most of these reports. So I went back and looked at some of those after doing the analysis I had done, and I was not getting close to what the company thought they would be paying over a 5-year period. So looking at all, I start asking questions. Why is it different? Where is the difference? And again, the confidentiality with them being the Department of Revenue, not being able to share their appraisal stuff with us, just created more questions than it did answers. So I was trying to resolve some questions that were asking me, and all it did was create more questions, sir.
Thank you, Mr. Chairman. So, Ms. Huxtable, I'm kind of curious, and I want to be cautious how I phrase this one. So when you think about the taxpayer and they protest and they want to be able to see everything that's involved in their appraisal, would you put this akin to that you're wanting the appraisers to be able to see everything that the state is using in their appraisal? Would that solve what you're asking? Or you said you were opposed to this legislation altogether. Is it more like a turf war, or is there a question here that transparency might solve? Thank you, Mr. Chairman.
Mr. Chairman, Representative Jennings, it's not a turf war. I have nothing against the department. I have nothing but respect for those people and the amount of work they do and the limited amount of time they have to do it in. What we felt was that based on all the information that has been unearthed under this topic, that the local assessors could handle the appraisal of this. So the bill as it was presented was to make sure that the state could continue to appraise those independent wind producers. And then would give the assessor the ability to ask for information and would give statute clarity that the department could share it. So as long as the bill was, I guess, to pass in its entirety as it's presented, and the sharing of information was still a part of it, I think the assessors would be comfortable with that, as long as there was that caveat that we would be able to ask and see the appraisal work, and or that there would be some oversight into the department's, the review of those values, just for the sake of all the taxpayers in Wyoming. Make sure we're doing it right. Whatever we're doing, let's do it right. I hope that answered your question, sir.
Okay. Anyone else? Mr. Co-Chair.
Thank you very much, Mr. Chairman. Assessor Huxtable, can you tell us the types of property that you that are locally assessed that you value now? I mean, I realize there's the residential and maybe some commercial, but there's more things that you assess locally that maybe might ease people's minds about taking on this other industrial facility or whatever you want to call it. And wondering if you might have some examples or thoughts about that.
Certainly.
Go ahead.
Chairman, Senator Case. Yes, we do. We have agricultural, residential, commercial, and industrial property that we value in our local offices. Some of the typical local assessed industrial are the typical things like a bakery. Any place where they take a raw product and turn it into a finished product, given certain NACS codes, is considered industrial. So we do value those. A lot of them are at a pretty low level of technology and integration. In my county, I have a uranium mine, I have a coal mine, I have multiple compressor stations, gas plants, refinery, and those are all locally assessed. Do I do them myself? No, sir, I do not. I hire expert help to do that, but I sign the final value. I make sure that the value is where I believe it should be with that expert input. So we value those every year. We see the reports, we look at the list of assets, we look at the depreciation schedule, the economic obsolescence, all those things that have to go into valuing a very complicated industrial location. We handle those every year.
A couple of follow-ups if I
Yeah,
could.
sure.
And Ms. Huxtable, in your original testimony, did I understand that all 23 assessors are supporting the position that you're taking right now?
Mr. Chairman, Senator Case, yes. And to be honest, that's not common. When we get 23 assessors in the room, we usually have 23 opinions. We did do a Zoom meeting. We did have all representation there, and it was a unanimous vote.
And then, Mr. Chairman, just follow up on that a little bit. So you guys all work together. I mean, you help each other. I know that's certainly the case. So I assume that you'll be able to tackle this big job relying on each other and sharing of information, not the confidential information. I'm talking about more about the techniques and the challenges. You'll meet them together. It's kind of a leading question, but I see we're not just talking about one assessor taking this on. We're talking about an entire organization. So maybe some comment on that.
Go ahead.
Chairman, Senator Case, absolutely. And during our call, we did talk about having a working group within our association to discuss what the needs might be for some of these assessors that are not familiar with it, how we can help them become more familiar with it, get them in touch with some options for appraisers if that is appropriate. We do that all the time. We have a personal property working group. We have mobile machinery working group. So this is not unheard of. We have a mineral working group. So this would be just another group that we put together for those, because seriously, not all 23 counties are affected. Obviously, there's going to be some assessors that it's not in their wheelhouse and it's not going to be. So we would concentrate on those that are going to be affected or interested in learning and bring their staff together and work together on doing what's best for their county and the taxpayers and the state as a whole.
And just one final question. So everybody, we've thought about this so far as being limited to a few counties that are located where, you know, there are substantial potential or existing wind resources that have been utilized, but independent power in the future won't just be wind farms. And in fact, we've seen, you know, there's a new solar facility proposed in Casper. There's one that's completed over at Sweetwater County, or is it Sublette County? I'm not sure. I believe it's Sweetwater County. One is now proposed for Fremont County. So places where wind technology may not be predominant, there'll be other forms of independent power production. There might be independently placed battery facilities. There might be, you know, if TerraPower has a nuclear plant, if that comes to successful fruition, that's not a utility plant. It may not be a utility plant. I guess we don't know the end of that. But So these are non-utility assets. Because of that, they would normally meet the definition of locally assessed, except for we haven't done it that way in Wyoming forever. Until we really started tweaking the law to say, does this seem right? And finally we said, hey, the law doesn't allow this. And so it's brought us here. Anyway, thoughts about how this might be applicable to other things besides just, it's not just 6 wind counties, as I see in our future.
Mr. Chairman, Senator Case, I'm glad you brought that up because I did leave that out because we did talk solar. Sweetwater assessor, it was on the call and we had the conversation about it would include those solar farms that are already built or in the works. And they were absolutely on board. That's a new learning curve for everybody already because there's not been solar up to this point. So the nuclear I haven't thought about. So let me back up on that one for a minute and take a deep breath on that one. But we fully recognize that there could be other industries involved. And we're ready for the task. We're willing to do the very best we can and see that we can be as fair as equitable across the state as we can be.
Okay, thank you. Any questions? Representative Jennings.
Thank you, Mr. Chairman. Ms. Huxtable. So back to this process of how those assessments are made at the state level. Without bridging confidentiality, is there, when you go to the state and you say, hey, look, my numbers are different than yours, is there not a template there that says these are the things that we look at?
Mr. Chairman, Representative Jennings, that's the exact question that I went to the state. I did go have a meeting with them. They were very willing to sit down and talk to me. Unfortunately, they just can't share what those adjustments were. Here is the list of things we look at. Some of it is, like maybe weighting a 5-year average of income that I don't have because I didn't have that information, but they've gathered it and accrued it. So when I asked for those questions, they gave me some indications of where the adjustments could have come from, but they couldn't disclose what they were and how they got them.
Thank you, Mr. Chairman. So not going to a specific case though, do they not lay out for you what their process of appraisal is? I mean, just without going to a specific case so that you didn't violate confidentiality. Do they not say, look, we look at this, we look at this, we look at that? Is there not a public template that says these are the things we're going to look at if you're an independent producer?
Mr. Chairman, Representative James, yes, they did. They did. I don't know about it being public. They did share with me the template and I did have that for the different 3 approaches to value, which I'm confident that they're considering and they're using. But as I said, when I took the annual report that I was given and put those numbers in where their template says they should go, the values did not calculate. And so there were some adjustments made by the state appraisers. I'm not saying they were wrong. I'm just asking what they were and how we can identify them so we know we're not missing something, and they could not share that. So was there a template? Absolutely. The adjustments, the appraiser adjustment, the appraiser, not tweaking, but adjustments that they make on every facility is in their notes and it's their decision to make it. It's not available to anybody but the taxpayer.
Okay, I think we're about ready to let you off the hook here
hot
on
seat.
this. Are there any, thank you. Are there any other assessors here would like to speak or okay? Yeah, okay. You bet. So Assessor Meyer and then Department of Revenue will be next and then we'll move to all public comment. Assessor Meyer. What is this?
Okay, got it, Mr. Chairman. Pat Meyer, Park County Assessor. I'm pretty objective on this. I kind of started researching wind farms at a request, and it was just actually Ms. Huxtable and I that started. I'm really objective because I don't have any wind energy in Park County. So nobody's gonna have to show me anything because I don't have one in my county, so I don't really worry about it. But I did look at 15 other states and have quite a bit of information on how other states do it, trying to figure out, but I couldn't see how we're doing it and how the values, are we doing okay? Are we because wind energy is becoming bigger and bigger. And as you know, they always say, you know, if you don't give us this deal, I mean, there's tax credits, there's exemptions that go into that. You know, there's people that states that let them off the hook on sales tax. It's really hard to figure out these appraisals in the different states. A lot of them do them different. I was always hoping to figure out how Wyoming's doing it, get a really good understanding so I could then question the other states and how they're doing it. So we could figure out, because I think the big question is wind energy paying their fair share or not? I mean, with state assessments, it reminds me of Montana. When I was doing our neighborhood states, Montana has to prove that they're not too high on their assessments, but if they're too low, there's nobody that looks at that. So there's nobody looking if the state is low. I believe they're using a uniform method and whatever, but we don't know that. We're looking for a check. And I did go through International Association of Assessors Officers and put an article in there saying, hey, who's an expert on wind energy? And we did get people, and I have met with people, but again, they don't know exactly how Wyoming's doing it as compared to Oklahoma, Illinois, Texas, and so forth. So that, I think, for me, that's what I want to find out, because as they start becoming more dominant, are they paying their, I don't even know how much wind energy, how much money do they make? Does anybody know? I mean, what kind of profits are they dealing with? So what would they sell if they sold that whole thing? What is it worth? I mean, they put in 35-year projects, but what I see is we're saying they're at their end of their life after 20 years. So is that correct? I mean, I'm not sure. And I don't know if because I don't know if another assessor could have me work on their stuff with them at this point. At this point, we're just asking for, if it's in our county, we have a responsibility to our taxpayers to make sure that, hey, we're getting money from them just like we are from you. And we're getting audited on everything. And we have to be in compliance with so forth. But it just seems like the department, they don't have to prove anything, because if you haven't had an appeal in 15 years, to me, that just means you're probably low and everything's going well. Most likely, that's the way I feel. I could be wrong on that. I'm sure they use a uniform approach that they're valuing all their utility companies alike. Now, whether that's what they should get up, the only way to really find out is to get a company on the side to take a look. These companies are not just appraisers, they're engineers. And that's why we use them on a lot of complicated stuff, because they can tell when a new piece of equipment was put in there, where the assessor's office might not be able to. So, and plus, they also stand by their appraisals and they defend them too. So it gets a little complicated when you get into more complicated stuff like refineries, gas plants, and so forth. Those are a little, I mean, we've been trained in this stuff, but to actually know that, yeah, you get outside help because it's worth your while and it's worth your county's while to hire these companies. So that's all I'm saying. With that, I'll take any questions.
Any questions? Okay, I see none here, none online. Okay, well, we appreciate your testimony.
Okay.
Thank you for your service, Assessor. Okay, anyone from Department of Revenue and want to take this bill on? Any comments? I'll give you a shot. If not, we're going to go to public comment. Okay. Anyone from the public, come on up, introduce yourself. We'd love to hear from you.
Good afternoon, Mr. Chairman, members of the committee. My name is Walter Eggers. I'm from Cheyenne, and I'm here this afternoon representing the American Clean Power Association. I believe I'm joined on the video conference by Mr. Tom Darren, who's the Senior Director at ACPA, and he may have some additional comments to make or answers to questions you may have about membership and so forth. But I'm here today to talk about the proposal that's before you from Clean Power Association's perspective. As you know, the proposal that's been put before you really addresses two issues. And I'd like to address those issues briefly and separately, because I think they're both important issues and they both have sort of unique features to them that need to be examined. The first is a fairly simple addition to the statute, the tax statute that defines the type of property that's state assessed. There was a question raised by the Department of Revenue recently about whether it has statutory authority to assess the property of independent power producers. And while we believe they do, we understand the department's question about the statute. And so we absolutely support the first part of the proposal that's before you that would clarify and confirm the status quo, namely that independent power producers' property is and should remain state assessed by the Department of Revenue. Why is that important? Well, because that's the way it's been done for many years. It's been done effectively. It's been done by experts at the Department of Revenue who are familiar with assessing this property and who have done so efficiently and effectively for many years. It was only a few years ago that the Department of Revenue issued memos on why it had the authority to assess independent power and how it was going to assess independent power. It has done so, as I said, effectively, and it is our position that the status quo should remain. The same assessor that is currently assessing this property should remain in place. They have the expertise to do it, and they should remain that assessor. As Mr. Anderson mentioned at the very beginning, there was a working group put together, and we were very pleased to listen to and participate in that working group meeting. And thought coming out of that meeting that this first part of the confirmation of state assessment was there was consensus on that point. And we're sorry to hear that there's not at this point, because we think that it should remain with the department. And frankly, we believe that the arguments in favor of moving it away from the department are not well-founded and not supported. The departments do have the expertise, and they have the ability to apply. A question came up about what's the methodology? How do they do it? Well, they're guided by the statutes. They're guided by their comprehensive rules on property tax assessment, and they're guided by their appraisal judgment and expertise in the department. And you know, this bill, this proposal that's before you would add an 11th category of property that is state assessed. And every single one of those 10 other properties are assessed by department experts who know what they're doing, guided by the law, and have the experience and expertise to do it effectively. The same is true for independent power. And so we would ask that you confirm that through the first part of this bill. Briefly, turning then to the second part of the bill, which is, as we read it, an effort to, just for independent power producers, require additional sharing of information between the Department of Revenue and counties where the property may lie. And what I wanted to stress here is that for each of those other 10 categories of property, this provision that is part of this proposal does not exist. All of those other 10 categories are under the rules that have been in place as long as there's been state assessment, which is there's one assessor for these taxpayers, whether it's mineral production or utilities or the other entities. There's one assessor who assesses the property. There's not oversight to that assessor from separate assessors, and there's not multiple assessors looking at the same property. And that's important to the taxpayer so that they know who it is that's assessing their property for tax purposes. but it's also important for the assessor. Whether you're talking about the Department of Revenue on state assessment, or you're talking about a county assessor for county assessment, it's important for that assessor to know they are the assessor. And there's not another assessor looking over the shoulder, questioning how that assessment is going to be done. Again, that assessment is guided by Wyoming law through the statutes that this legislature has passed, through the rules that the Department of Revenue has promulgated for state assessment, and through the expertise of the appraisal experts who are at the department. So it is our position at the American Clean Power Association that we agree there should be confirmation that this should remain state assessed property. But we see no reason and have heard no reason why this category of company ought to be treated differently when it comes to what's been called the sharing of information or the confidentiality of information. There's no reason to carve out an exception for these particular entities. With that, I would be very happy to answer any questions you may have, and I do very much appreciate your time.
Okay, members' questions. Representative Gray.
Mr. Chairman, we could all look up the statute, and I see you have the book before you. Could you list off those 10 that are currently, I think it would be good just to have that out there for everybody. Thank you.
Mr. Chairman, Representative Gray, the list of 10 that I referred to is found in the current statute, Wyoming statute 39-13-102, subsection M is in Mary, and then it's Romanets 1 through 10. And it includes the gross products of all mines and mining claims. So all of the mineral production in the state, as you know, is valued by the Department of Revenue, severance tax department. Property of pipeline companies, property of electric utilities, property of railroad companies, property of rail car companies, property of telecommunications companies, property of other public utilities, leased property, and then there's a definition of what that leased property will include, property of cable or satellite television companies, and the property of airline companies. And so this confirmation that independent power would be state assessed would come in as subsection 11. And I think what's important is that's a wide ranging category. It's not just the public utilities that are regulated by the Public Service Commission. It's not one category, but it's a variety of categories where the Department of Revenue has the expertise to address those. Longer answer than the question.
I think Representative Sweeney has a question.
Thank you, Mr. Chairman. So having looked through this, have you any ideas on how you would recommend amending this 0287?
Mr. Chairman, Representative Sweeney, I do have a humble recommendation. We believe that an amendment that would both preserve state assessment but not create this exception for independent power in terms of the sharing information would be to delete, I'm looking at the statutory language, there would be changes to the title and the introduction, but looking at the statutory language, it would be deleting lines 6 through 12. So going from pursuant to and then following through means a person, leaving property of independent power producers operating, and then we would change a facility to facilities. So property of independent power producers operating facilities for the generation or transmission of electricity for wholesale, period. And that would track the other simple categories of property listed in subsection.
Okay. Any other questions? Okay, well, thank you. Appreciate your testimony.
Thank you very
Mr.
much.
Eggers. Thank you. Anyone else from the public like to testify? Just come on up. A couple of you can sit up here if you'd like and we can just go rapid fire. Appreciate you all hanging here with us. Go ahead.
It's an
Hi.
important topic. Thank you for the time. My name is Kara Choquette. I work for Power Company of Wyoming LLC and Transwest Express LLC, both of which are independent power producers. So this legislation is very relevant to us, and I appreciate the time before this committee today. in general, I support everything that Mr. Eggers just said. We would like to remain a state assessed taxpayer as we are now. We also believe that additional language in lines 6 through 12 is discriminatory against a subset of a subset of a subset of state assessed taxpayers. But first, I just wanted to address a couple of the comments that came up and a question Representative Jennings had about what information is contained in the annual reports. The annual report form is available on the website of the Department of Revenue under the Property Tax Division. So for major electric companies, for example, they ask for you to provide the balance sheet, retained earnings, historical costs, lease instructions, system lease, Wyoming lease, income, stock and debt, plant factors, et cetera, et cetera. So all that information is available to the public. So anyone can know for any of these classes of taxpayers what exact information is being gathered by the Department of Revenue. And then there was a question about the subcategories, Representative Gray, about the categories of taxpayers that are currently state assessed. And Mr. Eggers hit on this a little bit. There's 10 categories in the statute, but the Department of Revenue annual report has great data on page 4 that actually breaks out all of the number of companies and producers that are state assessed. There's 936 such companies. So for example, 299 oil companies, 204 natural gas, 169 sand and gravel, which addresses another point. Those would be single site properties and those are continued to be state assessed. 28 cell phone reseller telephones, 20 airlines. And right now there's 40 private electrics and gas. And so this is public data in the annual report. I don't have a official public source to point you to other than my own research and data. I think the universe of independent power companies that are taxpayers is 10 to 12. So let's just say if that were half of the private electrics and gas, there's 40 of them right now, say it was 20 that are independent power producers. Those lines 6 through 12 would apply to 2.2% of the entire universe of state assessed taxpayers. So these lines are not narrowly tailored. They're broadly discriminatory when you just look at the math of the number of state assessed taxpayers that are out there. So I would just ask to please support the state's continued assessment of independent power producers. You can't tell when you drive west of Cheyenne which one is the Black Hills wind farm, which one is the NextEra wind farm. They're all essentially the same infrastructure. And you can see it. In fact, there's a public database that's put together by the American Clean Power Association, Lawrence Livermore Labs, and the USGS. You can zoom in on Wyoming and see exactly where every turbine is, where every substation is. You can see that literally from space. So if you have a question about how many turbines or what's at a specific site, there is public data that's available to help people understand. So I would suggest that you don't need feet on the ground when there is that sort of data that's now available to the public in websites such as that. One other point I would make is, this is really just about equality. We're just asking to be treated the same as all other power plants. There's nothing special about an independent power plant or a wind farm versus the other ones. They all have the same basic elements. And to imply somehow that our books aren't as watched over because we're not fall under the jurisdiction of the Public Service Commission. Again, as Mr. Eggers pointed out, neither are sand and gravel companies. Neither are some of these other entities that are state assessed. So that's not a fair reason to suggest carving out this different set. I also did another little bit of research. A review of other Western states and neighboring states shows that the majority of states do uniformly assess all wind farms, whether they're owned by an independent power producer like us, or whether they're owned by a rate regulated utility. And just maintaining the continuity of state assessment would assure that the Wyoming constitutional principles are met that require just valuation and uniform assessment of all similarly situated properties. So I have copies of this chart if anybody would like to see it. It's again 936 state assessed taxpayers. I estimate that this line 6 through 12 of this bill would affect maybe 10. And with that, I'm happy to take any questions.
Okay, any questions? Okay, thank you for your testimony. Okay, next.
Thank you very much, Mr. Chairman, members of the committee. Chris Brown representing Powering Up Wyoming. I echo most of the comments that were made by the previous two speakers. We also support the assessment remaining with the state and the cleanup language that's been discussed the past two revenue committee meetings. We also support the amendment that was brought forward by the American Clean Power Association in removing the confidentiality language. It does not seem fair and equitable from our position to single out a small subset of state assessed taxpayers and treat them differently than the balance of state assessed taxpayers. I will admit to coming to the meeting to not having understanding that the assessors had changed their position from the last meeting until now. And I mean them no disrespect when I voice concern that in their own testimony, they mentioned potentially not having the expertise to assess these developments and the need to hire outside expertise to contract with them. How many outside contractors will be needed? Will it be one that universally helps across the state? Will it be 6 different ones? If there is a development that's built in one county that's assessed by one outside expert and they build a second development in a different county, will that be a whole separate contracted expert helping to assess that project? We feel that maintaining the assessment responsibility with the state provides fair and equitable treatment for an industry that is investing significantly in the state right now. And we hope that that is the path that the committee will follow. I appreciate the time, Mr. Chairman. I'm happy to answer questions.
Looking for questions. I don't see any. Representative Jennings has.
Thank you, Mr. Chairman. So, Mr. Brown, so previous testimony from Ms. Huxtable talks about this discrepancy in the valuation between the state and not being able to duplicate that, I guess. And do you have any thoughts on that as to, I mean, if the basic policy is available, publicly available, it seems like ought to be able to come up with the same numbers. Somebody from the industry.
Go ahead.
Mr. Chairman and Representative, thank you for the question. Representative, the concern that we have with that language is the discriminatory nature of singling out independent power producers. If that is needed for that sector of industry, and I don't wish that upon the other state assessed taxpayers, I would question why that isn't applied evenly to all state assessed taxpayers. It's the singling them out that is the concern. And we have confidence that the state is doing an adequate job with these assessments.
Okay, any other questions, Paul? Did you want to add more comment? Come on up to the mic here and go ahead are you finished? Any other questions for Mr. Brown before we don't leave you out? You good? Yeah, I want you to stay in case there's another question. Go ahead.
My apologies, perhaps. I
Yeah,
should
go
have
ahead.
left.
Just introduce yourself again.
Sure. Kara Choquette with Power Company of Wyoming and Transwest Express LLC. I believe your question is about why is there a discrepancy between the industrial siting permit application perhaps and then what the assessed value?
Go ahead.
Mr. Chairman, the question is that the assessors, when they use this formula, they're coming up with a different number, or they're not able to meet the same number, or it should be higher or lower. But there's a public policy out there as to how this is calculated. And so do you have an idea of why you feel like the assessors are coming up with a different calculation or a different answer than the state has been?
Mr. Chairman, Representative Jennings, perhaps then I did misunderstand your question. What I thought you were asking about is why is the number potentially different from the industrial siting permit application to what the county assessor might be seeing? And I would just say it's, when you're doing an industrial siting application, it is extremely difficult to really forecast into the future what you think your assessed value will be. And we also are very clear, we as the project proponent are not the experts. We do defer to the Department of Revenue and are just trying to provide what the statute requires is an estimate of what you believe your property taxes will be. So we do our best based on the cost approach, what we think the project will be worth. I can't speak as to why the assessor's calculation on their own would be so different from the state. So my apologies that I misunderstood your question.
Okay, any other questions? All right, thank you. Thank you for your testimony. Okay, anyone else here, public comment? Anyone online?
Mr. Chairman, we have 2 people online. Looks like just one, maybe. We do have 2. We have the Mayor of Rollins, Terry Wycombe, and Alan Manier.
Okay, and I think Representative Jennings, did you have a comment? Question?
Mr. Chairman, at some point, I think I'd like to ask the Department of Revenue why they think there might be a discrepancy.
Sure. We'll do these two folks online and then Department of Revenue will wrap this up for us. Okay? We see anybody? Okay, we can see.
Mr. Chairman, I'm having trouble. This is Al Manir. Am I up? I'm having trouble getting my thing to unmute.
We can hear you.
Okay.
I think we can.
And I'm having trouble. Oh, here's the video. Great. Okay. Mr. Chairman, you may recall that I was here just about this time last year.
You just one more time introduce yourself and who you
Sure.
are.
I'm sorry. My name is Al Manir. I'm a former chairman of the Public Service Commission and a former chairman of the State Board of Equalization.
Very good. Thank you.
Okay. And I was here just about this time last year, pretty much on this same issue. The reason I was here was because I'm a property owner over in Albany County. And in my neighborhood, there is a proposed wind farm, the Rail Tie Wind Project. It's going to have 120 turbines. They're going to be 690 feet tall, that are going to have a life of 35 years, at least according to the permits that have been approved by both the county and the Industrial Siting Administration. And as I think one of the other witnesses mentioned, the estimates that this company made was that the depreciation for these 35-year assets was going to be 20 years. When I was here last year, I had no idea where they got that number. One of the things that has changed since that time is that the Department of Revenue has revised its memorandum about the appraisal of these sorts of assets, and says, among other things, that currently the department uses a 20-year physical depreciation schedule. There is no real explanation for why. It suggests that apparently it's common for some facilities to have a 25-year contract life, but that makes no sense in my case because this facility was permitted without any existing contracts. It seems to me that the problem here is that the department's policy is to give accelerated depreciation for no obviously justifiable reason whatsoever. That hasn't changed from last year to this year. Whether you look at it as a problem of how the department is doing its assessment, whether you look at it as a problem of a lack of transparency, whether you look at it as a problem as being a matter of whether local assessments would treat the independent power producers with something other than a 20-year accelerated depreciation. However you look at it, what's being proposed by the department is to give accelerated depreciation, which is not given to other taxpayers in this state. Now that hasn't changed since the last time I was here. I can understand there could be a number of solutions to this, but it seems to me it's still a problem. It's a problem that the department apparently has become more candid about since it rewrote its memorandum in September of this year. The memorandum that we were talking about previously when I was here before you last did not have that information in it. And I can understand why the industry would be happy to have a 20-year depreciation for 35-year facilities. But it seems we're in a time when facilities like the one I'm talking about, wind generators that will be 4 times as tall as the state capitol for longer lifetimes, should not be given favorable tax treatment because nobody's thought to ask about it. I really don't care how it gets asked. I don't care how it gets fixed, but it's not fair or right that they should have accelerated depreciation, and that policy should be allowed to go forward. And that, as apparently is the case, there is no way for someone like me to vindicate the right that I think I should have as a taxpayer to not have this industry have a favorable tax treatment. So that's really why I'm here, and I'd be happy to answer questions.
Okay, very good. Thank you for your testimony. Any questions, members? Representative Gray has a question.
Thank you, Mr. Chairman. So, and I understand these concerns that you're raising, but I don't think taking it out of the department is necessarily the answer here. One of the questions I have is why your former chairman of the State Board of Equalization in Natrona County, when the state board thought that the county was undervalued, they were sending letters pressuring. And that's one of the reasons why we've had, not the only reason, one of the reasons why we've had problems in Natrona County. Why is, if this is really an issue, why is the State Board of Equalization not communicated their concerns to the Department of Revenue when they were doing this? Thank you.
Well, I would have two responses to that. First of all, I'm not chairman of the State Board of Equalization anymore. I think this would be a concern to me if it were brought to my attention. Second concern is, how does it actually get to the State Board of Equalization? I don't really have standing to complain. I can't walk into the State Board of Equalization and say, you know, this troubles me. I can show you this memorandum from the department. I can tell you that there's a 35-year life for this facility. Do you think I'm going to get any hearing from the State Board of Equalization? I kind of doubt it. This is a problem that ought to be simply resolved in some way. But right now, it seems to have gotten hung up on the lack of transparency. And I don't know, I have every confidence in Director Henson, but I don't know why the department should be finding its way clear to make this commitment about 20-year physical depreciation for everybody. It just doesn't make any sense to me. So I don't know if that exactly answers your question, but I perhaps there's an answer there. You know, I've been retired for a while, which maybe explains why I sound cranky, but I think that there ought to be some way to get through this, and it just hasn't been happening. And I don't know, if I were a legislator, maybe I'd think of a way, but if I were the State Board of Equalization, maybe I'd open an investigation. I don't know, but the notion that we should continue to ignore the problem is the wrong one, because I can guarantee you absolutely that the trend in the wind industry is going to be for larger turbines with longer lives. So while it's been fun, I'm sure, for the industry to have 20-year physical depreciation for everybody, it's the wrong answer, and it needs to be addressed.
Okay, thank you. Any other follow-up? Representative Gray and then Representative Baker.
Thank you, Mr. Chairman. I just want to respond to that really quick. I think that, to me, it's an ancillary situation. I mean, it's a similar situation. I mean, the state board felt it had standing to say that they thought Natrona had valuation issues. I don't agree with that, but that they were sending letters, putting pressure. I mean, I think Ms. Huxtable, if she feels that the Converse County is having those similar issues, I think it's basically a similar situation, and they could be sending letters saying they're going to take over the situation, which was the threat that they levied in Natrona County. If they don't have that power, I mean, maybe we need to look at the statute there, but I think they do. And for this situation as well. So I guess I'm just responding to your point that I don't think, while in the nitty gritty, you may have a great point here. I don't think the answer is to take this away from the state, because you look at that list of 10 things. I mean, it's right in that basket. Frankly, if you were to take things away, I'd say airline property, that would probably be more in the county's role, satellite and cable property. I mean, that is certainly something I think they would just intuitively have more of an expertise in than in this situation. Thank you.
Okay, thank you. I'm gonna actually, would you, do you have any comments or response? That, Mr. Manier?
No, that's fine. I
Okay.
understand what you say.
Now, actually, Representative Hallinan had his hand up online and I missed, you've been patiently waiting. So I'm gonna go to Representative Hallinan and then Representative Baker. He had his hand up first. So Representative Hallinan.
Thank you, Mr. Chairman. Mr. Menier, do you think that this undervaluation of these properties because of depreciation is a broader thing than just that particular issue in by the state's valuation of these properties? And if so, do you believe that the regulators are being overtaken by the industry in these regards? Thank you, Mr. Chairman. Mr. Menier.
I hesitate to go sort of out over my skis. I guess I could tell you one thing, though. One of the things that changed when I became chairman of the Public Service Commission was the oath at hearings. The oath at hearings had been, do you promise to tell the truth under penalty of perjury? I said, no. For the staff and for everyone else administering oaths, I said, the oath is going to be, do you solemnly swear that you are going to tell the truth, the whole truth, and nothing but the truth under penalty of perjury? We're a self-reporting state. And I sometimes feel that unless you make it clear to the industrial people that you really need to work with them, get into detail, and get to the truth of everything, you're not going to get the right answer. If you just say, and you're lightly staffed, and you say, we have a form, fill it out, and that's the truth, we're going to accept it as the truth, you wind up not getting good answers. Maybe that's what happened here, I don't know. But I think that the dynamic is not the right dynamic at this state. And I don't want to get into the whole rest of the industry. My feeling about, for example, if you were talking about Pacific Corp, they're heavily regulated. We look at them 6 ways from Sunday. The independent power producers know. And what you've got going on in the background is what happens to the production tax credit. And nobody's spoken about that yet. And I don't know what the answer is, but I'm not in a position to wrestle with it anymore. Thank you for the opportunity to respond to that.
Okay, follow up, Mr. Hallinan, or you?
No, thank you, Mr. Chairman. No, I'm done.
Okay, and then Representative Baker.
Thank you, Mr. Chairman. My question revolves around the assertion that moving forward with this legislation is actually going to set this industry apart unfairly from the other 10 that were referenced in statute. Could you comment on that?
Well, I think they're being treated differently to start out with. It seems to me, stand that on its head for a second. If I get back to my friends at Pacific Corp, if they put in a power plant with a 50-year life, they get 50-year depreciation, a 50-year straight line depreciation. They don't get accelerated depreciation. How is it that we've wound up with a situation where the independent power producers are, because of the way we've been taxing them, winding up in a favorable position? I don't know about everybody else. I don't know about how everybody else is taxed. I haven't looked at it in a long time. But what I do know is this depreciation thing isn't right. And the fact that it's not possible to get to enough information to even wrestle with it is not a good situation to be in. And it seems to be the one that the independent power producers are in. So to say that they're not being treated like everybody else, when everybody else has a lot more people looking over their shoulders that keep them honest, makes me wonder, maybe we're asking the wrong question.
Okay, members, any other questions? Mr. Co-Chair?
Mr. Chairman, I think it's kind of very extraordinary here that we actually have a witness in front of us right now who not only was chairman of the Wyoming Public Service Commission, is very familiar with electric utility plant, most of the things, or a lot of the things that are on the state assessed side, and also was chairman of the Wyoming State Board of Equalization. I don't know of anybody else that would fit that situation. And I think what I've heard is I heard some jabbing that, well, why doesn't the state board fit this? And I think that one of the questions or one of the situations is, how can the state board fix it? If assessor can't bring a question, or another taxpayer can't bring a question and get a proceeding, and there's not an appeal, and the taxpayers aren't going to appeal because they're getting a good deal, how could it be fixed? And so I'm saying, listen to this double chairman here who has some wisdom. And am I, Mr. Chairman, am I mischaracterizing? I don't see how the State Board of Equalization could fix this situation. I don't see how the Public Service Commission could really fix this situation, because they don't deal with the investment. They only have the consequences of the rate policy of the power purchase. So who else can help to fix this? And then we have the Department of Revenue actually saying, we take no position on this bill today. So let's ask Chairman Menier to tie this up a little bit, maybe, and bring us home.
I don't, Mr. Chairman, I don't know if I can do that. It's not really a Public Service Commission question. I just bring the background with it. I think it's more of a taxation question. Perhaps the State Board of Equalization could do something. I don't know, but I don't know how it gets to them. I'm pretty sure that if, as a taxpayer in Albany County, and a taxpayer in Laramie County for that matter, that I were to send this concern with only the memorandum I have, with only the information that I know that the company itself has said about the life of its project, that I'd get any response whatsoever. It's not really yet a concrete problem. I suppose this legislature could direct the Board of Equalization to investigate it. I think they could. But I must say that, again, in my experience, typically the Board of Equalization does really, broadly speaking, two things. It acts as a court when people bring disputes to it. So I don't know how I get there. It also equalizes, that is, it makes sure that this is a little flip, but it'll kind of crystallize it. The Board of Equalization makes sure that counties cannot elect assessors that give their taxpayers favorable treatment in the context of the treatment of all taxpayers to the state. So that's really why there was the spring exercise that has vexed, I know, Natrona County. I really don't know what the answer is, but I don't think the answer is to simply ignore the problem indefinitely. And I'm happy to, at some point, talk to anybody about this offline, about what might be done about it. If I knew, I'd be offering you an answer right now. But the one thing I really want to bring to you is that it's a concrete problem. Last year, it wasn't as concrete because the outfit wasn't permitted, and I didn't have the revised statement from the state making it clear that 20% depreciation is what they're going to use. So I appreciate your time on all this.
Thank you. Okay, any other? Okay, Representative Baker has a question, and I think Representative Yin had his hand up too.
Thank you, Mr. Chairman. I just have a quick question about this gap between the projections that were offered when these projects are first being permitted and proposed, and then what we're actually seeing as far as collection and I guess it's not really a bait and switch, but do you have any idea how the state could move to maybe close that gap without trying to force their hand like this, like we have to?
Go ahead, Mr. Menier.
I guess my first reaction is that the state's policy could be that depreciation should reflect the life of the project. If that were so, then when the computation of taxes on a cost basis, historic cost basis, were made for the Industrial Siting Council or for the county, and I've seen the one for the county, which is what started all this, then it would be more accurate. So that's one idea. I mean, right now the problem is, where did they get this 20% number from? And originally it seemed like they got it from a consultant. Now I know that it was a state policy. It could be changed.
Okay, Representative Yin has a question.
Thank you, Mr. Chairman. Mr. Minier, so you presented us with a concrete problem statement. And you know, I guess thinking about how we provide solutions, do you think the bill moves us closer to a solution or further away from a solution, the way the bill's written now? I mean, maybe to restate the problem is that there doesn't seem to be a way to, as a taxpayer, to highlight that the tax being paid for an independent power producer might be under taxed essentially, and that there's no way for a taxpayer to go through a process to try to contest that. I think this bill actually gets us further away, but I would like to hear your opinion on the bill and whether it applies to the problem or maybe it just doesn't apply to the problem at all. Thank you.
No, thank you for the question. I think the bill gets you closer to a solution. Here's why I say that. The assessors have an interest in their county for making sure that they reach the full taxable value of these facilities. They also have some training and looking at it. It seems to me it's not unreasonable to share that information with the assessors because the assessors are capable of holding information confidentially. The assessors are capable of speaking both with the Director of Revenue and other personnel in the Department of Revenue about the situation of a specific taxpayer. I think it would get you there. I think any kind of a dialogue would move you in the right direction. So that's what I feel. As an individual, I don't need to see. You don't want people like me meddling, being gadflies and everything. But the assessor is an elected official that has some training, has an interest in making sure that that value is proper and is a proper exercise of judgment. And at least that would get more than one set of eyes on this problem than there currently is. So I would say, yes, I like the bill that way. But I like Senate File 59 as well. I think it's at least a step in the right direction, and it's better than no steps at all.
Okay, thank you. Okay,
Just-
anything else? Mr. Co-Chair.
Just to clarify, Mr. Chairman, if we don't have a bill at all, then it's becomes locally assessed. So that might be the best of all worlds. And so I just want to make sure that, were you considering that as one of your options? You said, Chairman Minier, you said this bill is better than doing nothing at all, but if we do nothing at all, it looks to me like it's going to become locally assessed, and that might be the very best solution. So I just throw that out there.
It would have the advantage of having it be in the hands of people that have an interest in realizing the appropriate revenue and people that are trained. I know you want me to say it's the best solution, but I'm not prepared what to say what the best solution is. It's a judgment call, and you all are capable of making it as well as I am.
Okay, very good. Thank you for your testimony this evening. Appreciate it. I think we have one more online. And we'll, okay, there you are. Welcome.
Hi there.
Go ahead and introduce yourself and where you're from and who you represent.
Mr. Chairman and committee members, my name is Terry Wycombe. I am the mayor of Rawlins. I am here to represent the city of Rawlins. To give you a little bit of background about myself, I was a county commissioner for 8 years. I have dealt with wind energy those entire 8 years up till now, and that's from 2005 to present. I worked with the County Commissioners Association, and I'm very, as the Wind Task Force Committee Chairman, and I'm very familiar with wind energy. We are in the epicenter of that, and so I've had to really study that industry and help decide what rules they will go by and taxation schemes and such like that. I do not share the mistrust in the city or the county, state government assessing these properties as has been expressed. I think that they're very capable of doing the independent wind farms, the same as they do the public utility wind farms. I mean, if they're not doing the independent ones right, how can we know that they're doing the public ones right? And it just is unbelievable to me. It was mentioned that the lack of protests over taxes would indicate that the numbers are extremely low. I would point out to you that the 8 years that I was a county commissioner, we never had one property tax protest in our county. And I still have people that think they're paying too many taxes. So I don't think it's a matter of lack of protests would be an indication of too low a numbers. The other thing is our local assessor, she's a great gal and she works her tail off, but I honestly don't believe local assessors have the expertise to do these sort of things. And so there's reference to, well, that's not a problem. Go out and hire a third-party assessor, because that's what they do with several things that are out of their league or over their head or whatever now. Are you willing to provide the money for that third-party assessment rather than the state doing it for the counties? Because it's not cheap and they're very expensive. And I would hate to see that 10 different independent wind farms got 10 different methods of assessing because they hired different professional assessors. The other thing that I would like to point out is that if the state can't fairly tax independent wind farms the same as they can tax public utilities, then shouldn't we really have them all turned over to the county or none? I'm telling you, it would be a burden the counties could not live through. There's a reason that there's an industrial siting council and stuff like that. And the reason for that organization is because the people that are at city level or county level, when it gets into these larger projects, the counties don't have the assets to go out and spend the money to ensure that these things are done properly. And that's why many things are turned over to the state. And again, I want to tell you, I absolutely trust the state and the way that they appraise these things. I don't understand why we would take a level playing field and tilt it so hard and to where it's so hard for us to create jobs like we're trying to do in Carbon County. It irritates me. I'm not going to lie about it. I don't think it's right. There was talk about how do we know that Wyoming's being taxed properly? Well, I was a county commissioner. We met in Denver with 5 different states. That was about the time Governor Friedenthal commissioned the E3 model. It was a tax comparison model to compare us to other states. It is so complex, it is unbelievable. But that study was done. And at that time, we were felt to be compatible because, as you remember, I worked very hard to get the legislature to pass that production tax, which nobody else has, and also to rearrange the taxation of these things. I'm telling you, we are competitive, but every time this taxation thing or changing this industry comes up, it creates an atmosphere where people I won't do business with somebody if I'm not sure of it. I'm not going to take undue risks. And if the state of Wyoming continues to be so darn unfriendly towards some of these industries that you run them off, that's fine, but you didn't bring my coal mine back. It's not going to bring that back. We have to have something. And in Carbon County, we're one of 3 counties that are in the black. And the reason we are is because of our wonderful wind that I hate. I hate the wind, but I'll tell you what, it's an asset that we have all grown to realize that we need to have it. As far as the depreciation and stuff like that, a lot of businesses, I was in the automotive business. I didn't have a piece of equipment that didn't depreciate before 10 years. That was 40 years ago, and I still have them in my garage. So, you know, the depreciation thing's something you kind of have to think about. I totally support clarifying this, but not adding other assumptions and unleveling the playing field. Today, from some of the experts, I've heard, what, 30 times? I don't know. Well, I agree. Until we do know, please don't do this. We in Carbon County depend on what we have. We don't have our coal mines. 2,700 people don't work at coal mines anymore. About 4,000 people don't work in the oil field anymore. I'm asking you to do the right thing, leave a level playing field, and allow us to make a living, because quality of life begins with a paycheck. And I would love to answer any questions that any of you have.
Okay, thank you, Mayor Wycombe. Any questions for the good mayor? Okay, appreciate your testimony and your service, and appreciate you being with us here this evening.
Thank you very much.
Okay, ma'am, did you have a question? I think we got a question for you, Mayor.
Okay.
Thank you,
it's Representative Roscoe.
Thank you, Mr. Chairman. In all your experience, Mr. Mayor, with wind, we're talking about this problem of I think it was the 20-year depreciation, the length that a wind turbine is viable. Is that the same that you came up with? Is it about 20 or 30? We had 2 different numbers there. Thank you, Mr. Chairman.
Mayor Wycombe.
When the Industrial Siting Council when I first started attending those meetings and we first started getting wind farms, of course, it was kind of one of those things. It was, a long time ago. And so nobody really knew how long they would last, to be honest with you. And as far as whether they get depreciated over 20 years or 30 years, that's something that would have to be studied. And I don't have a dog in that fight. I don't care whether it goes one way or another, as long as they're all, kind of treated the same. I will tell you this, that Rocky Mountain Power has a bunch of them up at Foot Creek, which is Arlington. A lot of you probably drove past and have seen. They are now repowered and they're larger machines and such like that. So they do have a lifespan. They do wear out and they do turn into scrap metal. So what that proper depreciation is will have to be something you'll have to study, but it'll have to be studied by people that don't say, I don't know, that do say, I do know.
Okay, any other questions from the mayor? Okay, Mayor, thank you. I don't see any other questions. So thank you again for joining us this evening.
Thank you very much.
Okay, I think we're gonna wrap this up with the Department of Revenue. And again, appreciate everybody hanging with us as we work this issue. Director?
Mr. Chairman, members of the committee. First and foremost, again, Brenda Henson, Director of the Department of Revenue. I would like to state that in my years in the taxation profession, I have worked with Mr. Manier. I've worked with the county assessors. For those of you who don't know, I served as a county assessor for 24 years. I understand the challenges that they face, and I also understand the passion they have for doing the right thing. Mr. Manier, a brilliant man, and I've told him that. He is very knowledgeable. I totally appreciate his perspective and his experience. But what I want to perhaps give you some guidance on is some of the pieces that we've heard testimony on tonight. First and foremost, I appreciate your considering legislation to clarify that the Department of Revenue is responsible for valuing independent power producers. I do appreciate that. If it is deemed by the legislature that we are no longer supposed to do that, I'm okay with that as well. That's why I still have no position at the Department of Revenue on which direction this bill goes. But what I'd like to turn my attention to now is appraisal theory. And when I speak to appraisal theory at this moment, it doesn't matter if I'm sitting here, a fee appraiser is sitting here, a company that could be hired to appraise property, the local county assessors. Appraisal theory is taught to all appraisers with the same concepts. So I tell you right now, there are 3 approaches to value: income approach, cost approach, sales comparison approach. And depending on the type of property that you're valuing and the type of information that you have readily available to you will depend on which approach to value you utilize. And in all approaches to value, you have to account for depreciation in all 3 approaches to value. And if you're conducting all 3 approaches to value appropriately, they should fall in pretty close if you've got the information. So let's talk about independent power producers. So with independent power producers, as has been stated, we don't have a lot of those properties in the state of Wyoming. And the best information we've got is that installed cost, historical cost. And so that's probably where we start as an appraiser. Again, I'm not speaking as Department of Revenue, I'm talking about any appraiser. That's probably where an appraiser is going to start, historical cost. Okay. With that historical cost though, as those properties are in place longer, we also recognize that this is an income producing property. The reason this property is being built is to have a return on investment. It doesn't matter if I'm investing in an independent power producer, that property, or if I'm investing in the stock market. I want an expectation of what the earning power is of my investment. And so an income approach to value really is not concerned with what the assets are, the real property, the personal property, doesn't really concern itself with that. What it concerns itself with is net operating income. What's my net operating income? And then I'm going to apply a cap rate to that to determine what would someone on January 1 of each year reasonably expect to pay for that property as an investment. So let's go back to the cost approach to value. So if I've got a plant that's 4 years old, fully constructed, has a purchase power agreement, I have some idea of the historical cost of that equipment. Can I use historical cost, less depreciation, maybe using a 20-year life? I can, but keeping in mind it's all fairly new, so you're not going to apply very much depreciation on that. But the other thing I have to consider as an appraiser is the longer that property is in place, if I'm looking at a depreciated cost, that depreciated cost, how does it compare when I'm looking at historical cost? How does it compare to what I could go out and buy it new today? Right? So I think we work with these properties because I will tell you that the cost of what it took to build a turbine historically is not the same cost as what it would take to build it today. And so we've got to look at that in that appraisal theory. The other piece of that sales comparison approach, we don't have a lot of sales of independent power producers property to look at a comparable sales approach. But if we did look at a comparable sales approach, we're going to look at what did it sell for in comparison to the earning power of that property. Because again, it's an income producing property. Let's turn our attention to this 20-year life that has come up. Mr. Manier is absolutely correct. We learn things as we go. And I will tell you that we might be using a 20-year life this year, but that may change. We also work with the other states surrounding us. We meet every year in Wichita where we all gather information and we speak to subjects. The life expectancy of equipment may in fact change. It's not something in statute, that's appraisal theory. We'll be researching that for all types of property. County assessors can explain that the life expectancy of all types of property is part of that appraisal theory. And we have to research it again. Trending a historical dollar is appraisal theory. This is how much a dollar's buying power was 15 years ago. I can't compare that historical cost 15 years ago to the buying power of a dollar today because they're different. And that has to be considered. So I'm hoping I'm bringing this around to a closure in that appraisal is not a simple process, and it is not taking numbers, adding them up to come to an answer. We've got a lot more things that we have to consider. And I can have a brand new, fully installed wind farm, but if I don't have a purchase power agreement, what is the value of that brand new property? Things that an appraiser, any appraiser, has to consider. And so with that, I think the best thing is perhaps I can answer questions. I can't answer them specific to properties, but hopefully I can answer questions related to appraisal theory. Thank you for your time, Mr. Chairman.
Okay, we'll start with Representative Gray.
Thank you, Mr. Chairman. So I want to get less in the nitty gritty of some of the stuff, more conceptual. The State Board of Equalization, Ms. Hanson, if they did not agree with what you were doing on a depreciation schedule, they could tell you that, and they could tell you, threaten you with equalizing, correct? Just like they've done with Natrona. I don't think it was appropriate in that case, but that's editorial. But they have the power to do that, right? And it's right there in the Constitution. They have the power to do that with you, just like they have the power to do that with the county, correct?
Mr. Chairman, Representative Gray, I think it's a matter of the statutes that are in place related to the statistical analysis of local assessed versus state assessed. There are no statutes in place on the department assessed properties, although I do believe that the State Board of Equalization could commission perhaps an audit of the Department of Revenue, or this body could commission an audit of the Department of Revenue. It has been done historically. I honestly cannot recall who paid for it, but I do have that audit in my office where an outside firm was hired to come in and see if the appraisal procedures that were being utilized by Department of Revenue appraisers were appropriate or not. At that point, they were deemed appropriate. So I hope that answers your question.
Mr. Chairman.
Yeah, go ahead.
I mean, Mr. Chairman, I just, Ms. Hanson, I don't understand how that could be constitutional. I mean, the Constitution clearly says that the state board can equalize. And so I'm just trying to understand this point. I mean, we're hearing from Mr. Manier, and I understand his points, but that there's some enormous problem happening in the way this has been appraised in the past. And my point is look, if there is an enormous problem, and maybe there is, the state board could intervene. And it's not a standing issue. They have the standing to intervene, whether or not there's appeal or not. And I really believe that. I mean, I think it's right there in the Constitution. I think whether or not there's a statutory procedure or not, they have that ability. And so that's my only question.
Mr.
ahead,
Chairman and
Rachel.
Representative Gray, the State Board of Equalization is a constitutional agency. I agree with you in that they do have a responsibility to look at all properties. The Department of Revenue has to certify our values to the State Board of Equalization, just like county assessors do with local assessed values. So while there aren't specific rules in place that the State Board of Equalization has on statistical analysis for department assessed properties, like there are for locally assessed properties, I do not disagree with you that they do have an oversight capability of the Department of Revenue. I believe that that's one of the reasons that in 1995, the Wyoming legislature took the Department of Revenue out from underneath the State Board of Equalization. You may recall, we were one entity at one point. And so I think it was a recognition that it's not appropriate for the State Board of Equalization to hear cases and also have direct supervision and management of the Department of Revenue. We are separate entities.
Okay, very good. Any other, I'm just working my way down and around. So Representative Sweeney.
Thank you, Mr. Chairman. So where's the disconnect on being able to give the appraisal and methodology to the county assessor if requested?
Go ahead.
Mr. Chairman, Representative Sweeney. So our statute has specific confidentiality requirements. And was mentioned before that even in this bill, it mentions it on line 6, page 2, where it says pursuant to subparagraph Q, Romanet 2B. Well, Q, that statute specifically addresses taxpayer provided information. Everything about that statute is talking about taxpayer provided information. We also have statutes on the book that says the appraised and the assessed value is public information, and that's of local assessed and state assessed. But the appraisal itself, where we are making the calculations of obsolescence and depreciation and trending a historical dollar, those work papers and the appraisal that we send to the taxpayer so that they can determine whether that is appropriate or not. That's the piece that we don't have the statutory authority to share with the county assessor or anyone else for that matter. That under Wyoming law right now is confidential. If that were to change via this statute, we are willing and wanting to be transparent with everything we do. We all know when you can't see something, it's suspect. That's just human nature. So we don't have any concerns about sharing of the information, not specifically to independent power producers, but again, if the legislature deems that it's okay to share that information, that's what we'll do. Just like the statute says that we shall share it with the counties if requested on the taxpayer information. The statute says we can if it's requested, and we do. So with that being said, I think the disconnect is there. I understand the taxpayer wanting to know that their taxpayer provided information, and you heard testimony of what those things are and where you can access what we ask for. I can understand why a taxpayer wouldn't want that information available to the press, available to the general public. I can see why people that buy property don't really want their sale price disclosed. I understand why citizens do not necessarily want information provided to the government for a certain purpose to be available to the public. I get that. But for this specific issue, I think that's a determination that this body has to decide. Do they want to provide access to information that has been deemed confidential historically? Do they want to provide that to the public and or the assessor?
Okay, thank you. Moving down this way, Mr. Co-Chair.
Mr. Chairman, thank you very much. Ms. Henson, you've done a great job and I really appreciate today. I know you're in a tough situation. You talked about the income approach and, you know, my training is kind of similar to appraisals but what do you do in a case where properties don't make income? So one thing about the situation with renewable energy in the United States right now is it's heavily subsidized industry. A lot of the ability of someone to be successful is by either selling tax credits, taking advantage of a production tax credit, or there could be other aspects. So companies may actually lose money in terms of their income statement. And that's, I understand, is very common. That's why we had discussion. In fact, a consultant hired by some wind companies actually came and told us that the norm is they don't make money. So talk about how you factor in those other credits, it's like the production tax credit, the credits that can be sold. And there's a type of utility scale credits I understand that applies in this situation as well. How does that factor in and affect the valuation? Because that's also part of the income that they would receive. So I'm interested in that. Okay, go ahead.
Mr. Chairman, Senator Case. So there are tax credits that the federal government has instituted in many ways, not just the wind industry. We see tax credits for multifamily. We see tax credits for other types of projects, but the appraisal theory is applicable to all. Again, you've got to look at knowledgeable buyer, knowledgeable seller. So how did that tax credit affect what I'm willing to pay as a buyer for a property? So from an appraisal standpoint, where you derived the money that you're going to use to purchase a property is not of great importance in an appraisal, meaning whether I got $3 million from grandpa or I received tax credits that I was able to sell and generate that income is not of huge importance to the appraisal, because the appraisal itself has to look at what is a knowledgeable buyer going to pay for that property. And that has to be based on what is the income stream of that property. You're absolutely right. We saw historically where if you just did the math and all we looked at was just the income stream, right, those properties would have, and we could have had wind farm owners appeal our value, because I will tell you, we've never valued them at zero. And we could have had appeals because if I did a strict income approach to value, then it looked like they were not income producing properties, even though they were fully functional and operational. So what did we do? We didn't rely on the income approach to value wholly for those properties. We did look at a cost approach to value. Some of you are familiar with the term netback with our mineral industry. With the mineral industry, we have those situations that occur today where basically we have statutes that create a floor. And it basically says on that mineral, whatever it costs you to sever that mineral, that's at least the bottom of that value for that mineral, whatever it costs you to produce it. Because if you're not making any money on it and it's worth zero, why did you sever it out of the ground? And that's Wyoming's mineral. So same appraisal theories hold true, whether you're talking about wind farms, whether you're talking about multifamily units. The appraisal theories are steadfast. I hope that answers your question.
I think it did, Mr. Chairman. Let me paraphrase. Originally, I heard you say that you really rely on the income approach to value. But the problem is the net income may be negative or very small, which would, if you just relied on the income approach to value, that would give you a low valuation. But I think you said in a situation where that happens, you look at the cost approach. I think that was your answer.
Yes, Mr. Chairman.
Thank you.
Okay, I think Representative Hallinan has had his hand up.
Thank you, Madam, or Mr. Chairman, and thank you, Madam Director. Madam Director. Oh, heck, I forgot what I was going to say. I think you could skip me for now, Mr. Chairman. I'll come back later.
Okay. Okay, any other questions? Okay, I'm Representative Jennings and then Representative Gray.
Thank you, Mr. Chairman. Director, when you look at the part we're changing here on page 2, line 6 through 12. The industry has concerns there about kind of discriminatory and you know, as I look at those other 10, do you share some of those concerns that we might be singling out an industry or a taxpayer here?
Mr. Chairman, Representative Jennings, I would not say that it's a concern. What I would say is it's fact. If this language is placed in Wyoming statute, you are allowing the Department of Revenue to share our appraisals, but only on independent power producers, and we are not sharing them for anyone else. So it's not that it's a concern, it's just factual.
Thank you, Mr. Chairman. Ms. Hanson, I got a couple questions on how we got here, and we've probably talked about this, but my memory, at least from the last meeting, I don't think it came up too much today. Your position is not the Department of Revenue can't do this or you don't have the expertise. It's that it was not listed in statute. You came in and just said, look, we need to follow the statute and it's not there. And the fact that the other ones are there, we probably, if we're going to follow statute, should wait for the legislature to provide guidance. That's my first question. The second question is, and there's more curiosity, how did the previous director come to the position that he should, even with the statute silent, should have gotten involved in this? Thank you.
Mr. Chairman, Representative Gray. So I'm going to turn a little bit to the historical. I'm going to answer your second question first, related to the prior director. So when the first wind farms were built in Wyoming, quite honestly, I don't think it was clearly understood the structure between independent power producers and rate regulated public utilities. I absolutely believe that those folks at the Department of Revenue just looked at them in thinking that these were going to be public utilities. When we talk about Pacific Corp and, those rate regulated companies that began building wind farms as part of their resource, I absolutely believe that that's why the Department of Revenue began valuing wind farms under that thought process that they were a public utility, not knowing what we know today. And so having been the property tax administrator for 7 years prior to being the director of revenue, I take some ownership of that, in that when I became the property tax administrator, I didn't ask that question. I had been a local assessor. I didn't ask the question, why is the Department of Revenue not valuing independent power producers? Perhaps I should have at that point. I did not. When I was the property tax administrator, I did ask, why are we valuing airlines? And quite honestly, it was because I had that question when I was assessor. Why is the Department of Revenue valuing airlines? I don't see it anywhere. And I don't know where you can construe that an airline company is a public utility. That was just a reach for me. So I asked the question and the legislature clarified. So there's no excuse, but I absolutely believe that we all learn as we go through life. And that's where we're at today is, you know, perhaps there's a question, we need to clarify it. And your first question, Representative, if you could refresh my memory.
Thank you, Mr. Chairman. Thank you, Mr. Chairman, Ms. Hanson. I guess the first question is, in no sense it was that you don't feel you have the expertise there. It's that you wanted to wait for the legislature for guidance.
Mr. Chairman, that's accurate, Representative Gray. We absolutely feel comfortable valuing all of the properties that we're statutorily required to. I did state that the appraiser that I've got assigned to independent power producers right now, wind farms, public utilities, he has taken on that role new over the last 2 years because we lost a position within the department. But what he has done over the last 2 years is research, brought himself up to speed on the industry itself. Absolutely valuing railroads and valuing independent power producers and valuing telecommunications are totally different industries. And it is important that who's ever appraising them understands the industry itself, because who are your buyers? Other companies that are in that business. So it's important for those appraisers to have that expertise, and that is where we're at today. And I absolutely have confidence in our appraisers that they can do this job.
Dr. Hallinan.
Well, thank you, Mr. Chairman. Madam Director, I guess you covered this in your last comments somewhat, but do you employ or hire any outside experts to appraise these independent power producers at all? Or do you have them all done by people that work in the department? Thank you, Mr. Chairman.
Mr. Chairman, Representative Hallahan, we value those properties with appraisers within the division. I will tell you that those appraisers reach out to other appraisers and are always researching the appraisal theory, the different industries, but we don't pay for that information. It's just, you will find that appraisers, just as the assessors testified to, we're a proud profession, and we do reach out and do research to make sure that we're getting the most accurate information and see if things have changed. So the short answer is all of the appraisals are done by Department of Revenue staff, and we do not spend any money for outside appraisal work.
Okay, thank you. You know, just to kind of close it out, there's been a little bit of discussion of proposed amendments on this bill to take out the information sharing with your colleagues at the county level. And then, you know, and really it's discriminatory. It's only 1 out of 10 industries, you know, 10 locations out of 936. And then so I sit here and wonder, well, what's the problem with sharing on the other 10 with the local county assessors? I mean, just having more people that know more, that are driving those dirt roads or whatever. And is there a problem with that? What's your thoughts on that?
Mr. Chairman, from the Department of Revenue's perspective, I have no problem sharing any of that information. But I do believe that the perspective of the taxpayer and the property owner whose data I would be sharing, keep in mind, it's not my data. I think that it is important that we listen to their perspective.
Colleagues in other states, I mean, is it similar setup to us? I mean, that state data is not shared with anybody else. And yeah,
Yes, Mr. Chairman, that is true, that it is set up similar to Wyoming.
yeah. Okay, very good. Any other questions then? Okay, I think I appreciate everybody hanging in here tonight, and I'm reading everybody's body language. You're starting to show fatigue. I hope we're not showing that up here. So we're gonna keep working this till however long it takes tonight to finish it up. So again, thank you all for your participation in this. We really appreciate your expertise and your input and your service. And so with that, we're gonna close public comment.
Mr. Chairman, Mayor Wycombe has his hand raised again, if you would like. Bring him
Ooh,
back.
you know, Mayor Wycombe, we're going back to you. We usually don't, but we're gonna take you here. We appreciate your service. So go ahead and hit your camera and we're gonna let you in. Mayor Wycombe, we usually do that public testimony and then you're done for the day. That's all right. You did a great job first time around, so.
Hello.
If you're watching on YouTube, you want to turn that off now. Okay, I think we're gonna move on now. We lost the mayor. Yeah, but I got a lot of notes from him the first time around. We're good. Okay, members, what's your pleasure on this proposal?
Move the bill.
It's been moved. Is there a second by Representative Sweeney? Looking for a second. Seconded by Senator Schuler. Baldwin? Well, she did this, so. Okay, members. Bill's been moved, the proposal's been moved and seconded. Any amendments?
Mr. Chairman.
Representative Sweeney.
Thank you, Mr. Chairman. So I am very concerned about moving this to our county assessors. And no disrespect for our county assessors. However, not all county assessors are created equal in knowledge or previous experiences. And unfortunately, for an Natrona County resident, we are living through that. And I do not believe that even with outside influences and outside contractors, which I don't know where that money's coming from, because that's controlled by the county commissioners within his budget guidelines. So he would have to budget for that, those expenses. So with that, I would like to offer an amendment that was spoke to earlier to put it back so that we make certain it stays with the State Department of Revenue on this issue. And what I would propose on page 1, lines 3 through 4, starting at on line 3, the word you would delete starting on line 3, authorizing the, and then coming down to line 4, release of information to the county assessor. That would be the first portion. Then to page 2, on lines, it actually goes lines 5 through 12. Starting on line 5, you would delete the period. Going down to line 6, deleting all of line 6, deleting all of line 7, deleting all of line 8, deleting all of line 9, deleting all of line 10, deleting all of line 11, deleting all line 12. On line 13, leaving in the word operating, deleting the word a, leaving in facility, except replacing that word with facilities. So you're deleting the Y and inserting IES. For the generation, then the rest remains for the generation of transmission of electricity for wholesale. So how that section would read, Mr. Chairman, is property of independent power producers operating facilities for the generation of transmission of electricity for wholesale.
Okay, is there a second?
Second.
Okay, it's been seconded by Representative. Discussion. Representative Gray.
Mr. Chairman, Representative Sweeney and I, we have a lot of different approaches on different issues over the years, but I have really enjoyed working with him on the property tax issue. And it is a huge part of why I joined the committee. And frankly, one of the things I hope this committee can address more is clarifying our statutes. And I know the increases always get brought through and I vote no on all those. But this is the kind of thing where I think there could be more consensus on. I think this is a good amendment. I think that in the interim next year or as an individual bill, we should look at the confidentiality issue on all of the list of 10. But I think there are some implications to this, to opening this up for everybody, as Chairman Harshman was asking about. I think that's the only other option. Just singling this one out, it's just not appropriate. So, in my opinion, so I think that we either do it for everybody or we don't. And for now, I think that we don't. There hasn't been enough notice to get clarity on what the implications are for the other 10. So I think we take this out and then go on to the other issue. So I support this amendment. Appreciate Representative Sweeney's work on it, and thank you.
Thank you very much, Mr. Chairman. If I had a hierarchy of what I prefer, it would be that this be locally assessed. We don't worry about the confidential part. It's not relevant. But this industry shouldn't be state assessed. And so because it is, and because you're trying to make it state assessed, that's a reason to have the sharing of information. And that's why we had a bill last year exactly on this point. So there are reasons why stuff is state assessed. There's reasons why stuff should be locally assessed. All right. When you mix it up, you're not helping. And the trouble is, these are properties wholly within the county. They clearly come under the jurisdiction of the assessor. And it's because of a mistake the department made years ago. You want to continue to have them there. But if they clearly come under the jurisdiction of the assessor, but we're not going to do it that way, the assessor still has skin in the game about whether we're valuing it correctly or not, because they're not utilities. If we just go through this list, state assessed mines and mining, there's a reason for that. All right, that's to have an approach about mines and minerals, especially pooled fields and oil and gas and all these things needs to be state assessed for good reason. Pipeline companies, the same thing. Pipeline companies run across counties, multiple counties. You got 20 counties on the same pipeline. Maybe not 20, but could be in Nebraska. Property of electric utilities, regulated industry. Regulated industries come under the Public Service Commission. They're rate-based regulated. The approach that they've used works really well to value the assets of electric utilities around the state. Railroad companies, same thing. I don't know about rail cars. There aren't any, so that I know of. So I'm not sure why that's on the list. Telecommunications, they were utilities rate regulated originally. They are still serve all counties and they still fall. Next one is property of other public utilities. I think the warehouses, storage facilities and office structure came about because that was part of railroad work at one time. I don't know that. I actually don't know the reasons under that one. Property of cable or satellite television companies, same thing as telecommunications. They came about because of the emphasis for state assessment in the communications industry. The airline companies, I agree with you. I agree with the director of the Department of Revenue. But we recently put airline companies under state assessment. We probably made a mistake. Independent, this would be if you had a sugar beet factory that's wholly within one county, maybe Platte County, and you wanted to add it to this list, would that be appropriate? What would Platte County say? That's wholly within our county. It's something we could value. That's what independent power producers are. They're electric factories. And there's a lot of complications, but they are largely within county jurisdictional. So the compromise that's on the bill now is that if you're taking something that should not be state assessed, you're going to make it state assessed to remedy the mistakes of the past and cover the appearances, then fine. Let's finally share the information because it didn't really belong there in the first place. That's what this compromise on this bill is. So let me ask you this, what's the downside here? Why do you think all these wind companies are here telling you to keep it state assessed? What is the downside? What are they afraid of? What if we're not getting all the taxes that we deserve to get, that the people of Wyoming deserve to get? And as a consequence, we may be overly attractive to the development of these facilities to the detriment of Wyoming's future. You can have too much of any good thing. We've only got so much open space, so much skyline, so much room for utility corridors, on and on. So there is a danger if we don't assess the right taxes. So I'm wondering just what are we afraid of? What's the worst thing that can happen? We get some tax appeals that go to the State Board of Equalization and they say, no, we're going to sort this out. The testimony so far is that they can't sort it out because nobody can bring an appeal. The assessor can't bring an appeal. And if the taxpayer is getting a good deal, they're not going to bring an appeal. Who else is left? There isn't anybody left. What is the downside? We probably should kill the whole bill, to be honest, because then we'd find out as the assessors begin to sort this through. But if you want to have state assessment, then share the information. It's the only compromise that makes sense at this time. Thank you, Mr. Chairman.
Okay, thank you. Any other comments as I move down? Doc Callanan online, I see your hand up.
Thank you, Mr. Chairman. I happen to agree with Senator Case on this. I think the confidentiality issue is really not a big issue if this information is only going to be shared with the assessor. The assessor has maintained confidentiality on all of our other issues and has not revealed those to the public. So I don't really think that we need to have a amendment to this bill that would prevent the information being shared with the assessors, because the assessors are the ones who are responsible for the county's income. And I think it's appropriate that they would have the ability to make sure that these assessments are being done appropriately. So for that reason, I'd be against this amendment. Thank you, Mr. Chairman.
Okay, anyone else on this? Go back here. Anybody else? Representative Sweeney,
So
you are the maker of the motion. I'm going to save you for last if I can. Anybody else? Representative Jennings, and I know he could still go, but I'm trying to time this up. So go ahead, Representative.
Thank you,
Jennings.
Mr. Chairman. So I hear Senator or the co-chair's argument here, but I think there are things that this is still a complex issue. We're not going to solve this all tonight. I look at this and I think the Board of Equalization still has opportunity to, they haven't weighed in, but I would think that I would hope that today's conversation caught their attention and that they might, and I would be fairly sure that the assessors might bring it to their attention. I think there's a risk if we leave this in here. I think we're just inviting discrimination lawsuit. I don't think there's any way to around that. I think the department says it's a fact, and it sure looks to me like it is. So.
Thank you. Any other?
Yep. Thank you, Mr. Chairman. So I guess my belief is I trust the State Department of Revenue on how they're doing these things. I agree that I would like to find a way so that the county assessors could review. But I don't think this is the vehicle to do that. And again, if I could legislate common sense, I would love to do that and provide that provision. But I last week went to an appeal before the Natrona County Board of Equalization. Very well laid out case. And I thought it was going to get remanded back to the county assessor. But our Board of Equalization felt their hands were tied by the State Board of Equalization and had to rule in favor of the assessor. So now it's on the taxpayer who has no expertise on these things to go forward to the state board. And I truly don't feel that the right place is with the county assessors to do the total valuation of these independent power producers. And yes, I feel it's discriminatory. And yes, I think the county assessors can hire outside experts. Where the money's coming from, I don't know. But in our case, in Natrona County, common sense is not put into effect on these things. And that's the reason, I guess, I feel so adamantly, I don't think the independent power producers have anything to hide. They just want to be treated fair and equitably. In our county, I honestly don't believe, nothing against our current assessor, but I don't think it's appropriate at the county level. Period. So I would appreciate your support on the motion. On the amendment.
Okay, and I'm not shutting down debate. Is there anybody else wants to debate? I'm just trying to time this up. Anybody else? Members, sensing you're ready to vote on this amendment. Okay, all those in favor of the amendment, please raise your hand. Let's start with the screen first. Okay, 1, 2, 3, 4, 5, 6, 7. All those opposed, please raise your hand. Start with the screen first. 1, 2, 3, 4. That amendment has not been, or excuse me, that amendment has been adopted. Okay, so we're back on this bill. Any other amendments? Okay, since we're ready to vote on the bill, no amendments. We please call roll on this LSO draft 287 as amended.
Senator Baldwin,
Aye.
Senator James, Senator Pappas,
Excused.
Senator Schuler, Representative Baker, Representative Gray,
Aye.
Representative Hallinan,
No,
Representative Henderson, Representative Jennings, Representative Roscoe, Representative Sweeney, Representative Yin,
No.
Co-Chairman Case, Chairman Harshman. If 6 ayes, 6 noes.
Members of the public, appreciate your participation.
And Mr. Chairman, we should be able to leave stuff here. It'll be locked up.
Can we?
Yeah.
Okay, yeah, members, you can leave your